Okay, so apparently I'm live. Don't know what they want me to do. Show control panel. Show my screen. Right. I am clicking and clicking, and nothing is happening. People can't hear you. Click to mute yourself. Fine. No one can see your screen. Click to start screen sharing. And I'm clicking and I'm clicking, and available only for presenters. Sorry, I don't know what to do. You have been made presenter. It's nice, thank you. You have been made presenter. It's nice, thank you. Okay. So you should see a screen now, which is the Dow Jones. Unfortunately, I don't think I can. So I'm going to assume that I'm live unless I hear otherwise from Richard or Ken. Markets open, US markets open in 5 minutes. But what I really wanted to do in those 5 minutes, I wanted to take you through something very quickly because what you need to know is a couple of things. I trade CFDs, so this is going to be real quick, and I hope that this is going to go. Okay, my name is Tom Hugert. I trade price action only, so don't be looking for moving averages or any other tools. I trade NASDAQ and the Dow Jones, and I know most of you will be trading S&P 500, so I got the S&P 500. The problem we're faced with today is that although I trade the US indices, I trade a product which may not be available to you. I trade something called CFDs. It's a synthetic product which mirrors 100% the futures market in the underlying market. However, the prices I see will be different to the prices you see if you trade Dow futures, S&P 500 futures. Therefore, I'll quickly show you where you can see the prices I'm trading on. I use a broker called Zzw.订单流学堂. They have a free demo account on their front page of their website. I'll show that to you next. So here goes. If you go to Zzw.订单流学堂.com, go to their front page, you go down here, and you try demo account. And the products that you're looking for is something called Wall Street Cash, US 500, and US Tech. So Zzw.订单流学堂.com, try demo account, and look for these products here. Market open 4 minutes. CFDs is a synthetic instrument which is popular everywhere but the USA. The reason why it is not popular in the USA is because it's illegal in the USA. What you need to know is I don't pay commission or exchange fees when I trade. I trade on 200 to 1. I trade on fixed spreads. Dow is always 1 point fixed. In hours, S&P 500 is 0.14. You trade on 0.25. And NASDAQ is 0.8. This is in trading hours. Now, what I have found is by looking at the live S&P 500 futures prices that I have running side as well, is that the prices that you will have on your S&P 500 futures will be 13 points higher than the price. Someone was not allowed to. Okay, there you go. Okay, I don't want to see this every single time, so thank you. S&P 500 futures higher than CFDs by 13 points. Dow futures are higher than CFDs by 60 points, and NASDAQ futures are higher than CFDs by 60 points. If there's I want to show you here finally with 3 minutes to go. What I want to show you is here's the S&P 500 future from the 19th of September. I sat and listened in, and here's the prices that I see on my S&P 500 cash prices. What you should see here, ladies and gentlemen, is that they are 100% identical. All right. If the market gets slow, I prepared some educational slides. Okay. Enough of that. Let's get back to it with 3 minutes to go. So here's the Dow Jones. It's currently trading at excuse me. It's currently trading at 29,500. So if you're trading futures, it'll probably be trading at 29,560 thereabouts. I have positions going on in the FTSE, so that's why I need to refer to that. And then here's the S&P 500 cash chart. It's currently trading at 2680. This is a 15-minute chart. Here's a 5-minute chart. It's 2680. So you will probably be at 2693 thereabouts. Okay, so here we go. I'm sorry for the delay. I thought that I had to log in with the link that I was sent to me last week. Turns out that I wasn't. Can I show camera? No, it doesn't look like I can do camera. Never mind. So on the 15-minute chart in the FTSE, you got a lot of overlaps. Buy bears, bull bears, bear bars, bull bars. And this is a mind boggle of a party. And no one is making money from this. There's a mind boggle of a party. And no one is making money from this. Well, maybe the scalpers. Over on this chart over here, I got the NASDAQ. So I may also call out NASDAQ signals. We are opening in 10 seconds. That will also give you a latency test. Once this bar here changes to a new bar, bang, there we go. It is 30 minutes past the hour. And we are good to go. Stand by in the Dow. I'm looking to sell short early. I'm still going to post the signals in my own Telegram group. It's kind of just keeps me accountable. Keeps me accountable. Just for your benefit, I want to show this. On the S&P 500, they seem to be moving in sync. I always look at the NASDAQ side by side with the Dow. Always. Nothing done yet. Had a couple of people mentioning that the volume isn't very good. The sound quality isn't very good. Nothing done yet. Over in the NASDAQ on the 30-minute chart, you have a triple top here. It's not matched by the Dow, but it is matched by the S&P 500. So stand by for a short position in the Dow. I just wrote that it seems that the group has a limit of 1,000 people and it's full. So we had the first 5-minute bar. It's actually bullish, but within the context of a trading range. So the reason why I haven't called a short yet is because the NASDAQ is firing on all cylinders. And the SPUs are stronger as well. What is positive as well, which makes me a little cautious, is that the FTSE and the DAX are also pushing higher. But looking solely at the S&P, I should be long. Looking at the Dow, I am contemplating shorting. I'm shorting the Dow here at 46. I'm shorting the Dow here at 46. And I got a stop loss about 50 points away. I put it at 599. So whenever you have an index that is unable to rally when everything else is rallying, that's a good one to short. Okay, stand by. Move stop loss to 29.5, 60. Stand by to add to short position. Stand by. Stand by to add to short position. Next 5-minute bar will close in 2 minutes. Okay, got 50 Dow points in profit. Going to try and get the 5-minute bar to close, but still in the context of a trading range. I'm just supremely bearish. You don't have to share my bearishness, but I am. Nasdaq is actually doing well. So moving stop loss to 29.546. Actually just stop loss to break even. If you're asking me questions, I am unable to see questions and probably won't entertain questions either. This is my first stream with Al Brooks, and I'm a little bit out of my not comfort zone, but my technical comfort zone. So I just need to make sure I focus on doing what I need to do. Stop losses at break even. Okay. Okay, close half here. Close half. Close half here, about 88. Here's the next 5-minute bar. I still have half running. When I trade 100 pounds a point. So for me, that's just 7,000, and half of that. Okay, so that was plus. Look to here and see if the American traders that are futures traders, if they manage to get anything like this. Okay, so we're still in the context of a trading range, but we sold the top of the range. What bugs me here is that I got an S&P that's pushing to a new high. You got a Nasdaq that's trading towards new high. So that's my primary reason for not adding aggressively is that I don't feel that the other indices are collaborating. I also look at the Dow. Sorry, I look at the DAX in Europe, and I look at the FTSE. So here's what the FTSE is doing for the morning. Always annoying to see an index going up when you're short, isn't it? Okay, I'm probably going to be stopped out now, but I am not stopped out. Stop was at 46. I got a 42. So here we go. This is a good sign that we're coming all the way back. I would want to sell short Dow again if we get down to about 84. So this is good. I'm also getting a reversal in the Nasdaq. So if you look over at the Nasdaq, you'll see that it too is just, it's not a reversal. Absolutely not, because it is just a retracement. And the same with the S&P 500. Let's just look at the bigger picture in the S&P 500. So, sorry, I missed my short add-on entry in the Dow, but I just need to explain something to you. So what we're seeing here is the S&P 500 is at the top of the trading range. And we're currently short from up here, and we are currently about 100 points in profit on the second half. Okay. I don't know, but I sat and listened to Al Brooks and a gentleman called Tim and Rose. I'm not sure I'm that kind of educator. I just don't use all that. I don't use an encyclopedia because I feel that I can't have a too deeply entrenched preconceived conception of what the market is going to throw at me today. I need to be able to flow and roll with the punches. Okay, and that is with the greatest of respect to these people. We are at the bottom of the range, so I will probably, shall I not? It's always the thing, isn't it? When you've seen lower prices, you're like, it's like a little bit more. I'm closing the Dow here about 76, 77. This is the S&P 500. And here's the NASDAQ. Definitely a disconnect. NASDAQ seems much more resilient. I got a message from my friend Lenny. He says that everything is okay, so that's good news. All right, we're at the bottom of the trading range, but you know there's a saying, and the saying goes that in bull markets, resistance is broken, and in bear markets, support is broken. We are firmly in a bear market, so not keen on buying support, rather sell resistance. I have this working theory, and I use the word working theory, is that in order for a trend reversal to take place, you do need to see a battle of some description, and I haven't seen it yet. All I'm seeing is the S&P just pulling back from the highest of the day. Problem here is that that high actually could be a triple top. So it's very plausible that we need to be sellers in the S&P around the 90 area, and you need to add 13 to that. Let's see. Prefer to have a good old pattern. The fact that we closed below the prior bar's low doesn't count for so much when this in itself was the high bar. This bar, this last 5-minute bar in the spruce was in itself a high bar. So it's just a 1 bar pullback. And in a bull trend, you buy 1 bar pullbacks. But I'll be damned if I'm a big buyer today. I need to see some real clear evidence. Having said that, see the evidence over in the NASDAQ. And so those two indices, they are the NASDAQ versus S&P 500. Now they rarely truly disconnect unless there's a real specific story and say Tesla is up 40% of earnings or something like that. Then one particular stock can really drag an index in one direction or another. Okay, so we are approximately 3 5-minute bars into the trading session. So far, we got two bear bars, and we got a bull bar, and then got 2 bear bars, and truly still within the context of a trading range. I colored my cursor purple with a slightly larger arrow. I thought that might make it easier for you to see. NASDAQ is making new highs on the day. S&P well on its way. Dow is not. I'm actually, for your benefit, analyzing the S&P chart rather than the Dow chart. I came into this trading day today thinking I need to be careful. It's Monday, extremely bearish week last week, but then a fierce rally in the final hour on Friday. And what's interesting was that was 2 standard deviations from the mean. And that is pretty much where all the option houses are sat. So there's probably a few concerned desks that'd like to see this go higher. And if that's the case, we may have to just jump on board. And that's fine. I can live with that. Stand by on the Dow. Ooh, it's tricky when one index is marching higher and the other one isn't. At least it is for me. So we have two 15-minute bars completed. We have a very strong bull bar. So we have two 15-minute bars completed. We have a very strong bull bar. But we're also double topping in the S&P right here. Double topping right now. It's like someone thinks it was a good idea to start asking me a technical question in the middle of a session. Nope. Double top in the S&P, larger time frame. Stand by in the Dow. I'm shorting the Dow here. Okay, so short Dow. At 29,506. Okay. Pick half here at 65, 66. Stop loss to 29, 5, 5, 10, 12. Okay. So plus 40 on. I'm closing the other half here at even. Close the other half here for plus 6. So plus 46 in total, 40 on half and 6 on the other. That's the way I trade. When I feel that there's a momentum move, I'll add aggressively. If I feel that the market is stalling, I'll simply just trade the ranges. And here I was, here we go. Basically trying to change this spaghetti junction, whatever this is. And I made 40 points on half the trade and 6 on the other. So 46 divided by 2 is 23. 40 points on half the trade and 6 on the other. So 46 divided by 2 is 23. Sorry. What pains me a bit is I can't see your comments. I have no idea what people are thinking, if you're liking this or not. But maybe that's a good thing. Maybe I should just shut up. How long am I supposed to do this? Because I'm kind of ready to go surfing now. Just looking at the structure of the S&P 500. Every single bear bar gets bought up. But what's holding it back seemingly is Dow's inability to rally. But everything else is rallying. FTSE is rallying. Nasdaq is rallying. DAX is double topping on the 15-minute. I'll show you these. Here's the DAX 15-minute chart. Clear as anything, it's the top of the trading range. And this Nasdaq, well, you probably got Nasdaq yourself. It's the hourly Nasdaq. You can see this. It's just a lot of fresh air above. Two strong bull bars on the hourly past the first 30 minutes. Pretty good. I hope that in spite of us trading different instruments, that you're still able to get something out of this. If you want me to, I can just very quickly show you this again. So you will see your S&P 500 futures are 13 points higher than the S&P 500 product that I'm trading. And the Dow is 60 higher than the product I'm trading, and the Nasdaq is 60 higher than the product I'm trading. Okay? We can go through this education later. It's always interesting to run a live trading room. I run one that's free of charge, and yet that doesn't stop people from complaining. But you say the ratio of complaints is about 2 to 1 to the thank yous. And it's incredible what you get complaints about. Some people complain that I'm not trading like I portrayed I was trading in the book that I wrote. Other people are complaining that they can't get the entries that I'm getting. Yet when I run a survey, 85% of people saying that they're getting the price I'm getting at, plus minus a point. Because it's just human nature. When things are going well, we take it for granted. And when things are not going well, it's good to have someone to point fingers at. You can sort of visually see this this beautiful channel here on the 5 minute. Not a big fan of drawing trend lines, but you can see that there would be support here. New highs in the spruce. Well done. Seems like we all get something. Those who are bullish, they can be bullish the S&P, and those who are bearish, they can be bearish in the Dow. So now we got new highs in the Dow as well. All right. Gotta accept that. My idea of a nightmare. A runaway market after you've been on the wrong side. And you're thinking, how do I get on board? You may ask, why am I not just buying? Well, I'll tell you why. Through the research on my own emotions and correlating it with my trading performance, I have found that when I eventually get my psyche around to actually do buying after I've been bearish, bear in mind that I haven't had a losing trade, but I have analyzed my way to the point where I say I shouldn't then participate in this until I've had just a mental break from it, or had an opportunity, or I get a better signal. Just joining the trend just doesn't work for me. This, oh my God, I just gotta be in. This fear of missing out. And in my opinion, when I follow the impulses of, I'm just gonna get in, I tend to lose. Because it's a decision that is based on emotion as opposed to a setup. But yeah, you, as a trader, your job is to make money, and you sit there and the market is zooming ahead. You might even have a few friends on a bulletin board or chat group saying, why didn't you buy when I told you to, etc. And you feel inferior. And it's important to remember in those instances that a trading life is not made up of one day. So chill. There will be other opportunities. Another aspect to bear in mind is that most traders will have a trading environment that suits them better than others. At least personally speaking, I know that I like to short markets. I can also be long, but I do like to short the markets. And when the market then is sort of in a runaway bull mode, that's when I tend to be left behind. And that's just the way it is. But I also found through analysis of my trades that if I'm just patient, just being patient, I will be given an opportunity. So it all boils down to believe. You just got to believe that you have every single angle covered. You don't need another seminar, another book. What you really need to do is to accept and acknowledge that, hey, this is perhaps not my ideal trading environment. And now I'm just going to wait for the right kind of environment. And there's absolutely no shame in that. Well, there is a shame in this placing a trade just based on hope. Truth be told, and I'm telling you this, God honest, I was hoping that the markets would rally. And I'll happy to share with you why. I felt that we by no means are out of the woods. We are entrenched in a bear market driven by take your pick, Russia, inflation, higher labor costs, you name it. In the Asian countries, a rising dollar, interest rates always affects developed countries harder because they have to spend more money to service their debt. And having a rally like this, it may just be a short-lived rally, maybe it will last a week, but it's not a bad one. It's not a bad time that it came because this market was getting nervous. I was short over the weekend and I was short during the night. So if I'm sounding a little jaded, it's because I traded half the night and I've traded currencies as well. It's not often that you get a 300 pip move in a currency during an overnight session in Europe. So we have two trades, two winners. We're up about 100 Dow points, and the market is motoring higher. I am taking a 5-minute break. Just going to rest my voice for a sec and get a drink. Okay? 5-minute break. So it looks like you have a pretty decent breakout in the Dow. So I'd like to be a buyer over retracement. So I'd like to be a buyer over retracement. Well, hey, I may change my mind. And the hourly is still a trading range. The S&P. The S&P looks better. Structurally looks better. They're not giving many invitations to buy in today, huh? Not even past, not even buy below prior bars low or anything like that. Yeah, the S&P did. Sadly, I follow the Dow. Look at the S&P. It actually did give you that opportunity to buy below prior bars low. I'm sat there looking at the Dow. Maybe I should start looking at the S&P more. There's the one in the Dow. Stand by, please. Stand by. Oh, I'm just remembering I am not in my own channel, so I can't swear like I normally do. I was also told not to tell any jokes. I am under strict orders from Al Brooks not to tell any of my usual jokes. You have an issue with that, you take it up with the God himself. That's Al who's God. Nothing to do with me. I'm just following orders. We are an hour into the trading session. An hour into the trading session. Dow is actually only up a handful of points. You may say, why don't I buy Dow now? Because I don't want it the second time around. I wanted it the first time around. Because if it comes down to the second time around, it's like, nah, not as good a purchase. I think I have a little bit of stage fright. Stage fright in the sense that I'm here and I want to quote unquote entertain, and yet I'm not finding that the market is playing into my strengths. So I'm telling myself, just wait, just be patient. There will be an opportunity. But I'm actually quite enjoying this. I wasn't sure if I would. Streaming, talking. The advantage that I have over at my other channel where I use signals is that if I don't feel like there's anything, I just don't say a word. But I feel that perhaps speakers here in the channel feel somewhat obliged to have a continuous audio stream and comment. I sat and listened into 3 other speakers, Al, Rose, and Tim, and I just concluded I couldn't do what they're doing. It's like this is not my style to talk that much. I don't mind talking, but I need to concentrate when I trade. In other news, I have a small position in Bitcoin. It was the absolute smallest position I could find, and it was just so I was able to keep an eye on it. And right now I am losing $50. I told you it was small. This is one of those I don't actually have to look for the Bitcoin symbol on my platform. So, okay. Don't follow me on this, please. Please don't. I have absolutely no qualifications for trading cryptos. No qualifications for trading cryptos. Can't help but think that perhaps this market is not as strong as it portrays itself to be. I have a lot of time for Al Brooks have done this every single day for years. I mean, one thing is to give live trading signals, which is what I have done for the last 4.5 years, but then to also talk. I think I could do that. I hope you're not too disappointed with this. My job is to make money, first and foremost. Education is secondary, so I accepted this invitation on the proviso that I wanted to trade. Stand by. Stand by. I need to short this. Stand by. Just be patient. Come on. I'm going to short it. I'm trying to get everybody to see the same price. And I saw 50, which was like the ideal. Come on. There. Shorten the Dow here at 50. Close half here with the Dow in about 35. Close half in Dow. You're going to get 37, 38. Move stop loss to 39.5. Let's just do 60. Because if this scalp is going to work, it's going to work quick. Because you got the Nasdaq falling below prior bar's low. Problem I got is that I haven't got the follow through in the, okay, start to break even. Got 30 points, 20 points in profit, 25, 30. Ah, come on, fall. Come on, you fucker. Get the fuck down. Never in doubt. Ooh, shit, I just swore. I'm sorry, Al. I'm sorry, everybody. I'm sorry. Sorry. I'm really sorry. I swore I wouldn't swear, and I swore. I'm so sorry. Oh, crap. Sorry. I'm closing the Dow here at 15. I had to spend some time. I wanted to take profit further down, but I had to send a message to Al Brooks saying I'm sorry, I swore. I see that I have lost 25 people out of the 1,000. Yeah, me and my potty mouth. But anyway, since I don't know what the questions are, I can't really answer, so. Oh. Do you understand why I took the position? That's more important, isn't it? I took the position. That's more important, isn't it? Okay. 3 trades, 3 winners, about 150 Dow points in profit. I suppose I should have told you why I did what I did. Ooh. Okay. Okay. I don't know if you'll get this lesson, but what you need to do is you need to understand that this is a trading range. Yeah? This is a trading range. Then we broke above the trading range. There's no real fight. Then we came down here. And I thought, okay, here's the fight. But then when I zoomed in on a 1-minute chart, I thought, whoa, what is going on here? So down here, I'm telling you, we need to get short. And then we got short right there. Right there. And then we got out here. Actually, I wanted to get out here because you get about 60 points and you think, oh, that's not bad for a nice little scalp. Problem here is I had to write an apology that I swore. Some people are very insensitive to swearing. I, on the other hand, am from Denmark, and we seem to not give a fuck. Right. I think I've done my job. 3 trades, 3 winners. Try to explain. Are there any questions? And if there are, how do I see them? I don't know. Man. Richard, Ken. I'm sorry if you're gonna. Okay, this session is being recorded. Now I'm trying to figure out what to do. Question is in the Discord group for the 3rd time, 4th time. Right. Discord. Okay, I'll find it. Discord. Hey Lenny, do you know where the Discord group is? Nope, me neither. Da. Okay, I think I found it. It says it can't find the message, Richard. Discord. Yeah, I'm clicking on your link. Nothing happens.
Hey, Tom.
Yes? Who's this?
This is Rose.
Hi, Rose!
Hello.
Oh my God! Hey!
Okay, so I think I'm going to read some of the questions for you.
No, I'm in something called Discord. Discord, I'm in.
Oh, okay, so you found your rabbit hole. Okay, great.
Yeah, I think I did.
Okay.
Oh my God, it's so good to hear from you.
Yes.
We're having
a great time with your
You're doing a much better job of this than I am.
No. Okay, I'm going to go mute now, so now that you can see it. Okay, people post your questions.
Okay, you may have to guide me through. Where do I go now?
Okay, so there is something called Trading Room Chat. Room Chat.
Okay, I'll find it. Yeah, I got it.
Okay, so scroll down, and then you should be able to see.
Yes. Oh, wow. Hi. Jesus. Wowzers. There's a lot of wowzers. High price action, Rose. That is an alluring picture you got there, Rose. Okie dokie. Da-da-da-da-da-da. Okay, there's a lot of questions. I don't know. You know, I get asked questions like, do you focus on day trading or swing trading? I just focus on making money. And if I feel the market can carry a trade, I'll hold it. If I don't, he says he trades CFDs 100 pounds a point. Can you trade 1,000 pounds per point and still face no Ray game? The 100 is the absolute max that I can trade. Tom, why don't you feel qualified to trade crypto? Isn't price action the same? Yes, that's a good question, Forrest Gump. Yes, a really good question. Technically, you should be able to trade anything, shouldn't you? But if you look at my track record in the FX market this month, you'll be thinking, Jesus, what an amateur he is. I mean, I know I have a 200 pip roller right now, but I have had a really tough month, really tough month in FX. Okay, this is brand new to me, this Discord. But Discord is distracting. It's really, I've got this beep in my... Hey, Rose, maybe I can just practice this a little bit. I feel that either I trade or I answer questions. I don't think I can do what you do. You're clearly much better at this than I am. I got this.
Well, I have practice, but I can read the questions as they come in.
Yeah, okay. Yeah, I think I'm going to have to turn this off.
Yeah, okay.
There you go. Off it is. Okay.
Hi, Tom. Could you please explain your trade at roughly 3 p.m.? Short on doll.
Okay. Let me just quickly go. Yeah, 2 minutes past 3. Okay. Let's go to a 1 minute chart just for laughs, because then it's easier to see exactly where I entered. And you can see my cursor. And we went short. It was 2 minutes past. Okay. Do you see that candle right there? This is textbook support and resistance trading. And then, guess Al would say that's an inside bar on a 1 minute. And I executed a short trade as momentum began to gather here. So right where I am right now. And this is nothing more than a support resistance was rejected, and I shorted it down here. Rose, I want to tell you a story, if you don't mind.
Please go ahead.
I worked on a broker floor for 10 years of my life, and during those 10 years, I saw millions and millions of trades executed by about 35,000 traders. And one thing that I noticed was that people seem to have an aversion to joining a trade late. So if they didn't get the very best entry, they wouldn't get any entry at all. And one thing that I took away from those 10 years was that I shouldn't be afraid of selling. I didn't need to sell the perfect tick. I could sell a little bit later on here. So this entry here certainly isn't the best entry in the world. I shorted it at 506, but actually that's 46 Dow points lower than the ideal entry, which would have been about 50. But I suppose I was just waiting for that little extra, because I'm here with you and I wanted to look good for the first time. I waited for some extra confirmation. Yeah, there you go. I hope that explains it. I basically feel that price action is a tool that we use to read the market. It's like we're out walking in the jungle, or use your own metaphor to your liking, but we are somewhere, and the price action is our guide, is our compass, is our map. But we still need something entirely different to trade well, and that is our mental game. And it is the reason why I wrote the book Best Loser Wins, because I felt that there was this emphasis in every single conceivable camp of the trading industry. And it's perpetuated by the brokers themselves that provide education. But what kind of education do they provide? Well, they provide technical analysis education. So as traders, we are lulled into this sense of, well, as long as I know technical analysis, the holy grail is intact, and I'll be just fine. But I have a very different perspective, because I spent 10 years on a trading floor, and I observed so many people with the best of intentions still ending up losing. And it felt to me as the body, our minds always seem to want to do the wrong thing at the wrong time. And I believe that's chemically induced by the serotonins, the adrenaline, the cortisols in our bodies, because fundamentally we have a fear-based mind. It's a mind that reacts quite vehemently to fear and the stimuli of fear. And so I'm not, I mean, you know, when I observe you and Tim and Al do your craft in these live trading rooms, Richard sent me the recordings so I had an idea of what to expect today. I was saying to myself, there's not a shit in hell I can do what you do. I simply cannot do the Fibonacci extensions and then the targets and Tim measuring here and you guys, you know price action so much better than I could ever dream of knowing. But I have spent a disproportionate amount of my career focusing on a different angle to trading. And so if you don't mind, I'd like to tell you a story. And I hope that your audience will forgive me for sort of, you know, branching out a little bit here. But I organized an event in London where I invited Al Brooks and Larry Pesavento was there, David Paul, and then I felt we need an antidote to the technical analysis. So I invited a gentleman I've known for 20 years now, Steve Ward. Steve Ward has written 4 books on the psychology of performance enhancement, and I'm not talking about drugs here. And he came on stage, and he's quite an imposing character. He's very tall and, you know, very well built and solid, so he's rather imposing. So when Steve speaks, it's a bit like Tom Cruise. He locks you in, and then you listen because you know he's got something to say. And he was starting off by saying, and there was about 130 people in the audience, and he started off by saying, hey, by show of hands, how important do you think trading psychology is for your trading? what you think when you are in the trade or not in the trade. How important is it? Say that you, say in the ratio to normal technical analysis, how important is the mental aspect of your game? And then, I thought I'd kick it off, so I said 60%. And then it became a bit of an auction. Someone said, I think actually the psychology of trading is more important than the technical. So I'm going to say it's about 70%. And sort of by common consensus, we agreed that trading psychology and how we think, our will to act on the knowledge that we have acquired probably accounts for 80 to 85% of profitable trading. And then Steve Ward said, and this was the real killer of the talk, I felt. He said, if you all believe that the psychology of trading accounts for about 70, 80%, why do you spend less than 1% of your time training your mind? And you spend 99% trading on all sorts of scenarios. What good are all those scenarios? I say, what good are all those scenarios if you're not able to act upon them? And I feel that's the overriding message here, that I am by no means the best price action analyst you'll ever come across. But I'm someone who has spent probably a lot more time on how my mind works when I'm under pressure than other people have. So when I do mess up, and of course I don't have a hit rate that is so much better than everybody else, but I do have a rock solid understanding of my own frailties and my own flaws. And that's important because one thing that I learned when I was at the trading floor for those years was that it is intelligent, well-educated, well-funded people, and they still mess up, but it's not, they don't die from 1,000 paper cuts. It's always 1 or 2 or 3 trades that really blow their accounts. And I will simply just not let that happen to me. So I felt that was an important story to get across.
And we're glad you're sharing with us.
You're welcome.
Next question. You have time, right? I mean.
Yeah, I mean,
okay.
No, I feel that the markets are I think I mentioned it earlier. I don't feel that these markets are as strong as they portray themselves to be. I got a very clear sell signals on 5, 10, and 15-minute time frames now. It's like there's this saying we used to say on the trading floor: they take them up to take them down. And we had this cynical way of looking at the world when we were floor brokers, that we just said, look, they just move the market up to the areas where they can fill the orders, because that's the job of the market. The market is to maximize the ranges to the fullest of extent. It's a cynical way of looking at our industry, but nevertheless, there's a lot of truth in it. Yes, Rose, I do have time. Anything for you. Anything for you, girl.
Oh, right. Okay, so I'm going to read this question. Does Tom focus on scalping, or does he do swing trading too?
I do both. I think I mentioned just moments ago, I don't necessarily go in and say, today I'm going to scalp. Rather, I go in and I gauge what the market will give me. And if I feel that we are in a trend, I've identified a handful of areas where I feel that we can have a trend day. They're almost always inevitably linked to a gap situations. When you have these what I call trend days, which happen 1 day out of 5, if you analyze 100 trading days, you'll see that 20 of them are really clear-cut trend days where the market opens in one range and then it closes in the other. Those are the days where I truly make my meaningful money, because then I'll add to my winners. I have 2 overriding principles. I'll never, ever add to a losing trades. But if I feel that the market can sustain it, I will add to my winning trades. And it's interesting because all the millions of trades that I watched over a 10-year period, I say that out of those 25, 35,000 traders, there were only perhaps 5 traders out of 30,000 that added to their winning trades consistently. A lot of people add to their losing trades consistently. But the people that add to their winners, they are rare. So swing trading, day trading, I just try to make money.
Okay. All right, so the next question, any reason he doesn't use any moving averages? I think we already heard that you said that you come from the institution side. So I think that can explain why you won't use it.
But you have to understand that institutional people aren't good traders. They're just really well paid. And they make money from other people. I was just about to swear again. They make their money from other people messing up rows. That's what brokers do. They're not brilliant traders. They just sit there and laugh at their clients' idiosyncrasies. Isn't that scary?
Yeah, it is scary. That's what we know.
No. And moving averages for me, it just doesn't represent anything. Look, I don't mean to go against. I hold the talents of Al Brooks in extremely high favor, in extremely high respect. But doesn't mean that I agree with everything. So the whole idea of a 20-period moving average or exponential period moving average on a 5-minute graph, sure, he may have had something, but Al Brooks is suffering from something that I call patternicity. And patternicity is a psychological phenomenon whereby we see patterns in something and we tell ourselves this is what has happened. And patternicity is not a bad thing either, but it's like the French philosopher saying we don't see the world as it is. We see the world as we are. And so we have conditioned ourselves during our formative years in trading by using a 20-period moving average. Well, then this 20-period moving average is going to tell us some facets that we can identify cognitively, and that's the use of an indicator. Isn't because there's a magic potency to a 20-period moving average over, say, a 21 or a 19. It's merely just my first mentor. He said something really interesting, and I love repeating it because it's his words. It was a gentleman, an Australian called Bryce Gilmore, and he said, "You don't see on a chart anything but what you have trained your eyes to see," and that to me is gospel. And so you witnessed me trading live today, and I happen to focus on the Dow Jones. Maybe I should spend more time on the S&P 500, because today has also been interesting for me to observe the two side by side. Having said that, all you saw me do today was the collective sum of all my experiences using price action. And as you could also see, I certainly had flaws too. The market was rallying without me, and I was very honest to say, hey, I feel like I should be long here, but every single time I chase the market, it always ends badly for me, so I'm not going to do that.
So then this answers, say, if I want to ask a follow-up question here, you won't be looking at wedges, triangles, high ones, and high twos.
Maybe you and I could have a private consultancy session, because I'm still struggling a little bit what a H1 is and what a H2 is, and I certainly don't do triangles and wedges, etc.
Gotcha.
Rather, if I can show you something here on the screen, can you see my PowerPoint right now?
Yep.
Yeah. Now, I didn't know how today was going to go, Rose. You gotta trust me here. I had no idea what this first time was going to be like.
You sounded nervous. We didn't understand why you were nervous. I mean,
of course I'm nervous.
Perfectly fine. We're happy that you're here. So
of course I'm nervous. I'm in the company of professional traders, and Al Brooks is my hero. So of course I'm a little bit intimidated. Well, maybe that's just my own quirk, but I am, because I wanted to do well, and I wanted people to walk away from my session with a good experience and had made money above all. But what I wanted to show you was that I prepared some slides yesterday. I spent about 3 or 4 hours on these, and I was wondering, there's 9 of them. Would you mind if I went through them?
Sure, go ahead, please.
Okay, so I think what I can do is, I think it has this, so they got this laser pointer. So as a day trader observing a short time frame, such as the 5-minute chart, we often we are not often witnessing sudden reversals, except if a piece of planned or unplanned news has surprised the market. Rather, we tend to get retracements as opposed to trend reversals. Al Brooks, in my mind, has summed it up so well when he says that markets suffer from inertia, which in this context mean, and I'm borrowing a phrase here from market wizard Linda Bradford-Raschke, when she said the odds of the trend continuing are higher than the odds of the trend turning. So in this example here, where I've circled the FTSE, I'm witnessing a hard rally off the open, which then undergoes a retracement before rallying. It does beg an interesting question. Under what circumstances should I expect a retracement, and when should I bet on a trend reversal? In other words, when is a retracement just a retracement, and when is a retracement a trend reversal? And I think that's one of those questions that we're all suffering from at any given trading day. Should I be betting on a trend continuation, or should I be betting on a reversal? And so, in my opinion, and I'm struggling to put my thoughts into words, I admit, someone needs to be proven wrong. A battle has to be fought, and someone has to walk away victorious, and someone has to retreat and lick their wounds, which in this case would mean someone has to scramble to cover their losing position. The circle you're seeing is not a reversal, in my opinion. Yes, we have a candle bar that has closed below the low of the last 6 bars, which is this one here. But where's the battle? Was the battle fought in the trading range here? Some would argue, perhaps, but I'm not convinced that it is. There's a bias of bullish traders, hence we have a trend higher. Otherwise, the market would not have rallied as it has all morning, now 2 hours into the trading session. Yes, you can argue that the bulls are having their argument eroded, but where's the identifiable battle? I don't see it here. This looks like just another retracement. So the FTSE is trading a little lower, then reverses back up again. For all intents and purposes, we are headed for new highs. It was just the retracement that we saw here. There was no battle, and that's the important bit. There was no one who had a real fight, which manifested itself as a candle or bar that went to say new highs, but then closed at its lows. There was no surprise. There was no one who went, oh, shoot, this doesn't look good. As this chart unfolds, you see 2 identical retracements, more or less, and you would expect at least a test of the highs. But then this bar happened here. And these are the things that I constantly look out for. The bar went above a prior bar's high, and then went and above this tiny micro double top just before, and it closes on its lows. So whatever happens from here is probably still 50-50, perhaps 60-40 in the bear's favor. However, my studies of short-term movements suggest that when one party, the bulls or the bears, are caught wrong-footed, you should be alert to a trend reversal move. There was a battle here. This was the opportunity for the bulls to take us to new highs, and there was a winner, at least in a microcosmos. Of course, you can't draw a conclusion with empirical evidence, and much of what we do can't be tested. You trade from our guts. We sense how the market reacts at certain price levels, or in my case, I sense who's nervous and who's in control. It's all based on my interaction of the bars and how they dance side by side. I'll show you a few examples of this battle setup. So I'm arguing that you got a battle here. This was supposed to be a retracement, but right here, where the laser pointer is right now, is why I say the battle was lost by the bulls. They had an opportunity to take us up to new highs, and they failed, and we closed on our lows. And my job would be to sell short here. And incidentally, these are trades that I placed in my Telegram group. And then we get a move like this. I wish I caught all of it, but I didn't. Another example from the FTSE from the day before. All of these examples are from 2021 because I can't deny that I'm a nerd when it comes to charts, and I study charts quite intensively also in the weekends, and I just happened to have gone through the month for 2021 in my studies. The index has traded up, then sideways to lower. That's what you're seeing here. And then this bar here, I'm always mindful of a bar that makes a new high above a trading range, or what I call it a micro double top. I think that's directly stolen from Al Brooks. And then the battle is fought and it's lost. And then we see a sell-off. So I need to see someone coming out of a battle. And so if you just relate this, let me just finish here for a sec. So if you relate this to what we are seeing right now in, say, the Dow Jones, what you're seeing here, if you follow my cursor right now, you have a trading range right here. Then you have a breakout bar, and my trading setup is that if you trade above a trading range and then you come down in midway through to the range, you need to sell short here. This is the place where I sell short, and this is what you have witnessed me doing today. Wonder if I can. And so here's a couple more examples. This is completely identical to what I've just shown you, but this time it's on a 5-minute chart. You have a trading range, you have a break up, and then you break down. And I believe that that's the defining difference between a retracement and a reversal. It's probably not the only defining difference, Rose, but I don't use Fibonacci to identify these because I find them to be unreliable. And as a trader, what I like to do is to look for those places where I think, whoa, someone's going to get caught here on the wrong side. And you saw that practically every single position that I executed with you live today, they more or less went in my favor immediately. I had very little movement against me. So that's what I live for as a trader, moments where I feel someone is wrong-footed and will now scramble to cover their position, thus adding fuel to a trend reversal. I can sum it up as markets don't often reverse without a battle at some point between the bulls and the bears. Some would, of course, just call it double tops and double bottoms, and they're right. I'm simply adding a layer of nuance to the argument. I've created a simple room for trading it, and in my channel, I prepared these slides for my Telegram channel. We have traded this setup at least 100 times in the channel.
Mm-hmm.
So,
okay. One more question. Actually,
yeah,
two more questions. Tom, you appear to favor Dow over S&P, as do I. Any reason for that favoritism?
Yes. Yes. So first of all, I don't know if it's come to your attention, but I trade CFDs, which is a product that is not available in America. But the advantage you have with CFDs, being it's a synthetic argument, a synthetic product, is that as long as the broker is okay with it, you don't get any slippage at all, none. Secondly, I can trade the Dow at 1 point, and I can trade the S&P at 0.14. I believe that you're trading at 0.25 when you're trading futures. So by any stretch of the imagination, since I don't pay commission to execute my trades and I don't pay any exchange fees either, I am economically better off by trading CFDs than I am trading futures. Yeah.
Okay, very good. Now the next question is, Tom, how do you determine when to get out of a trade?
Badly. Badly. Some days, and it's very psychological, some days I am feeling very aggressive, my testosterone levels are high, I feel like I want to really push the trend aggressively. Other days I'm more timid, maybe I haven't slept well, maybe my blood sugar is not so where it should be. So I can very quickly sense, yeah, today is going to be an aggressive day, I'm in the mood for it. As opposed to, no, I'm not in a mood for it. And I know it's not the answer that the gentleman or lady that asked the question wanted. They wanted some kind of technical reason. But so much of what I do is based around a pit trader style mentality. There are times when I will add aggressively and I'll be short 600-700% of my initial position. And other times what you saw today is I'll simply take half my profit and make sure I just lock it in for a nice trading day. And you know, and I try to average about 25,000 pounds every single day in my trading in profit. Of course, I will also have days like on Wednesday last week. I think I was down 32,000 pounds by the end of the morning, and then by the end of the day I was just down 18,000. But you know, I will have losing days as well. I just think it's very defining for me as a trader is that I don't let those losing days override my sense of what I need to bring to the trading to act in my own personal best interest. And be able to, in order to be able to do that, I need something which is not just technical analysis. So to me, it's no good that I can cite all these percentages about there's a 50% chance we've seen the higher the day or the lower the day. It means nothing to me. Everything that is to me paramount is where can I get in and where can I get out and where's my safest entry.
Okay, well that's some chunk of change that you just shared with us that puts my weekly earnings in some perspective there. Okay, so here's the next question.
I've done this for a long time, Rose.
I just made a withdrawal last week, and I had to have my broker confirm it 3 different ways. Like, come on, I'm just withdrawing a tiny little amount, just send the money. So now I'm hearing you how much you're withdrawing. I bet they would have put me on 1 month, delay for if I wanted to get that kind of money out of my account. Anyway, so how does Tom train his mind for trading psychology?
Yeah, do you mind if I just digress for a second? Because I think it's really important. Yeah, I make a lot of money trading, but I don't have any humongous trading account. Do you know why I don't have that? There's one specific reason, and it's all to do with how my mind treats complacency. If I have a big account, I'm much more likely to be sloppy in my trading. And I noticed this on the trading floor over the 10 years, is that people had the highest percentage chance of losing the day after they've had a good day of winning. And so I make sure that I don't have a lot of money on my trading account. Of course, I have enough to cover the margin, etc. Obviously, I probably have more than most, but it's not like I have $10 million on my trading account, because I've had that before, and I found that it lulls you into a false sense of security where you're thinking, oh crap, that was a bad trade, but let me just double up. I'll hold it a bit longer. But by always trading on a shoestring budget, you are also much more inclined to be disciplined. And I think it's really important. One shouldn't underestimate the small account. The small account has every bit as potential to make big money as the big accounts. We always think, oh, the hedge fund, or they have big accounts. But hey, it's not about the size of the account. It's the size of one's conviction when you're trading. And that's where yeah,
and
sorry.
If I can add a little bit to what you're just saying, is I'm a small account person. I was explaining to the trader members just Friday, I start every month with $2,000. I know it's ridiculous, but it's just that it puts me in a discipline so I don't have to trade too many times, because that used to be my problem. I would overtrade. I'm that little squirrel, going for the nuts, and it's so easy to lose. So I made a decision that if I start with $2,000, I can spend the first couple of days looking for a swing trade. So maybe 1 or 2 trades I can do well and grow that account. Then I can take risks and start to scalp rest of the, maybe the week, the next week, or the following weeks. So building that account is important, but obviously if you have a lot more cushion in your account, you can take a lot more bigger risks, so there's nothing wrong with that. But I want to ask you a follow-up question. How often do you trade? Do you trade every day? Do you trade every day the same instruments? Or, you do well in one day and you take a break maybe? How does that work?
No, I trade every single day, but I have a pre-market routine, which is an intense, almost often it will involve either physical exercise, or it will involve a brisk walk, and it will also involve meditation, visualization, and the ability to neutralize my mind. I need to go into every single trading session with a blank mind. And this is what spiritual gurus would be calling being in this moment right here, right now. I cannot have any baggage, I think it's called. I cannot have any baggage from the day before. I must have washed my mind of all the chemicals that has been induced from a very heavy trading session where perhaps I've made a lot of money or I've lost a lot of money. Whatever I've done, whether it's losing or winning, you can be darn sure that my mind is going to be full of chemicals. For example, if I've had a bad losing day, I don't sleep so well. If I've had a good losing day, I don't sleep so well. Because my mind, the adrenaline is pouring, or the nephrin, I think it's called, or it could even, or if I'm losing, it would be the cortisol. And I think I'm probably one of those. I don't hear many people talk about it, but I think it's because I spent so much time on the trading floor observing so many people with the best of intentions simply just mess up their financial future because they couldn't control their own emotions. And someone like you then, I've listened into your technical analysis, Rose, and you know, I'm a midget. I'm a midget compared to your knowledge in technical analysis.
Okay, I'm blushing.
But I'm not flirting with you, girl. I mean, I could, but I'm not. No, I mean it. But what is important to remind you of is that you don't need more technical analysis. You need more faith in what you already know. The will to act is more than important than any other aspect of our careers as traders. And I find that unless I go through have you ever seen that tennis player called Nadal? Rafa Nadal? Yes. I haven't. Yes. Well, brilliant tennis player. But it is insanely hilarious to watch his pre-serve ritual. You know, he's run his fingers through his hair, and then his forehead. He touches his nose, and also the way that he lines up the water bottles. And to the untrained eye, you think he's just a quirk. But to the trained eye, and I call myself a trained eye in this respect, what he's doing is he's creating a rigid structure in his mind so he can focus on this moment right here, right now. I have a brilliant example of that. During Wimbledon 2007, I was invited by Ralph Lauren to their hospitality tent. I had no idea why Ralph Lauren invited me, but he'd see me on TV, and I'm the worst dressed person in the world. So there I am, and I get to sit next to the world's number 9 at the time, a golf player called Luke. God, I always forget his surname. It'll come to me. And so I'm sat there, and at the time, Tiger Woods was number 1 in the world. And I had a little bit to drink, so I asked Luke Donald, his name was Luke Donald. I asked Luke Donald, why are you number 9 and Tiger Woods is number 1? But he took it in a really good spirit, Rose. He said, the reason why Tiger Woods is the best in the world is, it's not that he's got better skills than me. You know, I think I can hit that golf ball just as far as he can. I can probably even hit it far further. But what Tiger Woods has that none of us has in the quantities that he has, he's got a goldfish mentality. He can badly mess up on the 15th during putting. And then on the 16th, it's like he's forgotten all about it when he's teeing up. But if I mess up on the 15th, I'm still carrying it on my way to the 16th hole. And when I'm lining up my shot, I'm still thinking, why did I mess up so badly on the 15th? So this ability to completely wash your mind from whatever happened before is one of the inherently most important traits, much, much more important than whether you are a brilliant price action analyst or not. And you only ever get to that level by repeatedly practicing and putting yourself in a meditation state or a visualization state. You're putting yourself into an area, what I call the dark corners of your psyche, where you really pressurize yourself into imagining things where it's not going your way. And then you are beginning to replace that with, hey, I am really doing badly here. I'm going to replace that action that I normally do with the desired action. And I know it sounds really mumbly, blumbly, hippie-like, but I have now traded live for 4 years, and people have been witnessing it. And you don't have this kind of performance that I have without having a rock-solid mental framework and foundation. You just don't.
Great answer. Okay, so I have 2 questions, but they're kind of related to one another. I know, we might be running out of time here, but here is the question, number 1. What is your advice for newish traders regarding paper trading versus trading real money? I understand the psychological differences, but would you advise it is better to start live trading with even £100 in an account rather than prolonged paper trading? Also, what are your thoughts on backtesting? Essential, or is forward testing on a live account with a small balance a decent, better option? And then the second follow-up question is, how long did you take to grow your small account into a sizable one?
Okay, there's some great questions. Let me start off with the back testing and forward testing. One of the detriments you can have when you are presented with a strategy is to get an A4 piece of paper that says, well, this setup has a 60% chance of succeeding. So what does that mean? I still need to handle 40 losers out of 100. Am I mentally equipped for that? So when I test scenarios, Rose, I do it manually because I need to feel that every single bar that comes after my setup, what would I have done here? So it's a shame you haven't got a camera, but I went up to the local print house and I got 7,000 trading days printed out on an A3 sheet, not an A4, but A3, which is bigger. And I did that because my eyes are getting older, and that would enable me to truly see these things. And so my weekend work, for example, the things I have shown you here on the screen, that's actually the result of me sitting with a pen and paper, testing manually and trying to figure out what would I do here? How could I have made money from this move? And that leads me on to the next question, paper trading. There's nothing wrong with paper trading, but you don't learn from paper trading. You might learn how a platform works, and that's great. But trading is learned by holding positions. It is when we hold positions that we truly learn about ourselves. And it doesn't really matter whether you need to trade at a size that is just marginally meaningful. So if you can find a broker where you can trade a penny a point or a cent a point, if that doesn't mean anything to you, then the purpose of the account isn't there. You need to trade so at least has a little bit of meaning to you. And I would not recommend paper trading simply because it will not elevate your game because it's missing the most vital part of trading, and that is the mental aspect of it. You don't, I don't know, I think I have a slide here. You can just, I did come prepared, you see. Where is it? I think it must, sorry, it's on another. But
that's okay, take your time, we're here.
But basically I'm saying you're not a losing trader because you don't know enough about technical analysis. You're a losing trader because you don't know enough about yourself. And you only truly learn about your limits when you have positions on. So that would be my answer.
Thank you. What specific things do you do as far as looking at the chart before the markets open?
I don't look at charts before they open. That has no use to me. I need to be mentally prepared. So say that you have an hour at your disposal. Do you spend that hour on chart analysis or do you spend that hour on mental preparation? And to me, mental preparation. If I have a little bit of excess of time, I will spend it on looking at some charts.
What is your morning routine like, Tom? That's me asking.
Okay, so my morning routine is I start very early, and I will then often do really strenuous exercise. And the reason why I like to do strenuous exercise is because there are certain exercises that are scientifically proven to increase the levels of testosterone in your body. And, you know, I'm not a young man anymore, Rose, and so I'm 53, and so I need to be very mindful of the levels of testosterone in my body. And I feel that I need testosterone to act decisively. So heavy weight training is really good at elevating the testosterone level, which as we age tends to just decline 10% a year from age 40. At the age 18, testosterone at its peak, but after 40, we tend to lose 10% a year. And so that's one thing that I will do. Once I've then done my exercise, the second thing I'll do is, and I wrote a book about it called Best Loser Wins. And this is not an advert because, you know, when you buy my book at Amazon, there's only one person that's getting rich from that, and that's Jeff Bezos. It's not me, that $1.50 that I receive for every book. But I wrote that book because I wanted to describe the mental process that I go through. And I think there are two things that are more important than anything else. I have what I call the Book of Horrors, and that's my past. It's a PowerPoint presentation, and it's and it could be the one that you're seeing right here. Do you see this trade here? Let me show you this one here. So, for example, this is a DAX trade that I did earlier on in my Telegram channel. I bought it right here, and I had a stop loss at 260, and the market goes 259.65. And so a chart like this would make its way into my Book of Horror. And it's a Book of Horror that is simply just charts that I go through of my old trades that I then sit and I absorb before the trading day starts, so that I'm preparing my mind for all eventualities. Because the last thing I want is to begin to chase the market or be scared or be nervous. I mean, in fact, today I think is a really good example. You all witnessed me selling short the Dow a couple of times whilst the S&P 500 and the Nasdaq was rallying. And you might have been sitting there thinking, why doesn't he just buy it? He should just buy it. He should just buy it. And that's where I needed that mental preparation to be able to say to myself, hey, you might have to sit out a few of these 5-minute bars, but just be patient. There will be an opportunity. And then the opportunity came and we made another 40-odd Dow points. But you need a real I need to have prepared my mind for all of these eventualities. Otherwise, I'm just like a ship without an oar. I'm just flapping in the wind, and I have no real direction because my mind, left to its own devices, will simply run riot.
Okay. What is his favorite European futures, FTSE or DAX?
You know what? They're two siblings, and sometimes they're like two girls, and you go to the ball. You go to the dance with them, and sometimes you want to dance with the DAX because she jigs and she jives, and the FTSE's just sat there on the bench doing nothing. And other times the FTSE is full of life and the DAX is boring. So you you don't always get it right, but I try to trade the one that actually is the one that's got the most life in it. But absurdly enough, one of the best scenarios I can imagine is, say that the FTSE is struggling whilst the DAX is strong. To me, that's always a clear-cut sign that I need to be short the FTSE, or vice versa. Say that the FTSE is really strong and the DAX is just floundering a little bit, it's not really participating in the rallies. That's for me. I'm going, oh, you need to find a place to sell short the DAX. So I use this what I call the intermarket relationship to also get a sense for, which one do I want to be? Do I want to be short one, or do I want to be short another? And I use the way that they interact with each other. Of course, I don't always get it right, but I get it right enough to want to continue to use that as a barometer for which product to trade.
Okay, well, thank you. You all have more questions, everyone, or?
I think it's a good time to finish here as well.
Yeah, I think so too. I mean, not that I think so. I shouldn't say that. We don't want you to leave for sure. What am I saying?
I didn't take it
as a.
I'm
worried about your, but go ahead. I'm sorry.
No, I didn't take it as an offense. Not at all. Not at all.
I need coffee. Okay. I'm not seeing any other questions, but there was one question. Will you be coming in more frequently and sharing your trades with us?
Depends entirely on you lot. I don't think I can answer that question, and he might go through the record and say, you can't swear. Maybe I'm not invited back. But I'm pleased with it, because I'll be honest with you. I hold Al Brooks in very high esteem, and I wanted to do well here, and I was nervous. I can stand in front of 10,000 people and talk blah 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 blah, but there was something about this. I felt like I needed to. It's like that first date, isn't it? You just want to. I just want to do it so I can get it over with.
No, I think that's normal. Like you said, you were out of your comfort zone, and people don't like change. We know that. It's part of our nature. But we were really looking forward to your arrival today. So I think it was great. I learned a lot. I'm sure everybody else did. So we really thank you for your time and sharing your knowledge and skills and your experience with us. We appreciate that.
Thank you so much, and thanks for the invitation.
Sure. Okay, I'm going to stick around, guys. So if you want to hang out here a little bit more, maybe for an hour, I'll be here.
You probably want to take me off admin, I imagine.
Okay.
Because otherwise, I'm just going to do something.
You see that there's a little X at the top right corner. If you click on there, you're going to see options. Either close the webinar for everyone, don't touch that. And then there is one, it says leave the webinar. If you click on the leave webinar, and you're out.
Bye-bye.
But hold on, let me get the, okay, here I am. Okay, excellent. Well, thank you, Tom. Have a great evening.
Thanks a lot. Bye-bye.
Bye. Okay. That was really cool. I'm very excited. I'm very excited that Ken and Elle and Richard, they all set this up for us. I think it's a good experience for all of us, right? Okay. I don't know if I can top his price action reading or trading now with all my babbling here, but today's my off day, but I figured that I should just hang out a little bit since I traded. Right off the gate, I do see a wedge here, guys, and actually nested wedges here, but there's just one. I know you guys can see my chart, so there is a measured move, but we met that measured move. So you can see right there with bar 28 at 36.8150. So I traded this morning, and market has started in a Friday's trading range, but the bar 1 is a really nice bar. Now, bar 2 is a follow-through second bull bar, although it closed on its mid-level. Okay, so it didn't close really strong, but the bar 1 did the work for you to go long. The only problem here with these first two bars being bullish bars and telling you that you can go long and possibly this is a trend from the open, that you are buying at the top of what seems like a trading range. And there is the possible double top with bar 79 high. Okay. So right there, I was a little bit hesitant, and I really didn't want to buy that bar 2 close because we were just so close to that, okay, resistance level. So I waited for a pullback, and then bar 3 pulled back, and I said in the ES read only, analysis read only, I said we have a double top here with bar 79 and bar 3, but we're pulling back. But most likely is at the 50% of bar 1, their buyers are waiting, okay? But it's also, look at it, what do you see right there? That is a resistance broken, turned into a support. So most likely at the EMA or at the 50% of bar 1, you have buyers are waiting. So and then you can also see that we have I and then we have O. Bar 2 is an inside bar. Bar 3 is an outside bar. And then you get the follow-up bar 4 as an inside bar. So we have IOI set up right here. That means breakout mode, right? So I said right there, I started to, measure some targets and whatnot. And I posted a bunch of charts in the ES analysis read only. You can go check it out. I said, I'm looking for a certain criteria for bulls to close on something. And I think that was 37.08. So once I got that, I went long. And plus, there were buy stop orders there, waiting and kind of stacked. So I went long. But you can see, even though the first two bars are bullish, and yet we pulled back, and bulls are probably looking for some kind of a bull flag right there and looking for a breakout. Look how weak the breakout was. Okay, so it kind of fizzled. It didn't get good continuation. Then you have a breakout, but look at bar 7. Now, bar 7 is the news bar every day, right? So I didn't really look at what we had, but there was Fed member Collins was speaking, and she was scheduled to speak at 10 a.m. So that is basically your bar 7. Now, I don't know what she said or what she didn't say. It really didn't make any difference. But then we finally got our confirmation after 2 bars later. So now you have another. This time you have outside, inside, outside. Or we could just say bar 8 is inside, and we have an outside up bar. It's a really nice close. We finally are getting that breakout, and I added to my long. I kept scalping, taking out, scalping, and finally just got out. And you can see that we have some kind of a wedge with an overshoot right here. Okay, so then you have some bulls. Since we have maybe first leg pullback, second leg, another pullback, and finally the third leg, we have finally these bulls started to take profit. Now, what started as a take profit started to turn into a more bears jumping in. So anyone who actually sold underneath bar 11, they're selling basically. They're not really selling, they're taking profits, but those who are selling, their stops are here. So you're looking for maybe a 5, 10, 15, 20 point run, but the 20 point is basically a small swing, right? Then I start to look, okay, if we do sell this, then we get the bar 13. Okay, so that's a really good follow-through bar. But to me, that's actually a breakout bar. We have a tiny little trading range there, and the bar 13 is breaking that range. Not only that, you see that wick right there? Bar 12 wick, okay, so we're breaking that. So we're breaking some kind of a support there. It's very vague, but it's there. We're breaking it, so that means there's something here, okay, it's acting as a magnet. And right there we have this trading range. And that trading range, Tom actually touched base. I don't know if you guys caught him talking about there's a trading range. I think that's what he was talking about. So to me, that is a tight trading range as well. I call that an area of interest. So I extended it out, and I said, I'm looking for a 2-legged move down there. Not only we came all the way down, here, I'll mark it for you. So I'm going to take maybe this area. Okay, 2-legged move. We bounced, but look how we bounced. You have a really strong bear bar. We're testing the middle of that area of interest, right? So we have this wick right here is most likely, and you can see that this was a support once. We had attempt to break it, fail, attempt to break it, fail, and we finally broke out. So if somehow, okay, we break this tight trading range, we come underneath that and testing below that, chances are we're going to come down and test that low, bar 9 low, that wick. There might be some sell stop orders underneath waiting. Okay, so if we do break it, we're probably going to come down. Why? Because it makes a structure. Okay, it was a support there. When we come back to that, okay, bar 9 low, and if we end up getting a strong bear close, you have a structure here giving you a measured move target. Or you can take that, doesn't matter, one or the other. And so bar 20 actually broke that, and right after making a bear flag at the EMA, you can see very weak pullback. Okay, so these bears are repositioning themselves and selling. And what do they test? They test that low. They're testing that low, and some profit taken due to there were limit order buyers were there, and there probably still buy orders are sitting. But it really didn't go much, right? So you got another bear flag. It's actually expanding triangle, which is a form of a bear flag. And it sells, and where's it going to go? It's going to test there. There's another small tight trading range. I generally take the middle, like the mid-range of that. So if I exclude the bars and I take exclude the wicks, and I just take the bars somewhere there, okay, middle. I'm just eyeballing it. You see, we just tested it, and then they tested the low and then start to take profit. So you could see that if you're a pattern reader, you could see the head and shoulders pattern. So what I do with the head and shoulders pattern, very simple. I see this, right? And anytime you have a wedge, Albrook says wedges are generally head and shoulders patterns. So whether it's inverse, right, or the regular one. So what I do is I immediately measure the left shoulder, the highest point of the left shoulder. So somewhere there. It's actually like this, right? Like that. And in order for me to sell this, I look for first this area to be tested, and I always expect bulls to break this area, start closing bull bars, because when they do, you're still in your channel, and this channel is going to keep going up, okay? So it's going to invalidate your head and shoulders pattern. Now, how do you sell it? Well, you look for rejection and no bull closes, and then you get this beautiful, right? But it's kind of a late in the game that you're entering. But at this point, to me, this is a structural breakdown, and I have a really nice measured move target, and that's it. So you can sell, you can put your stop right here, this rejection point area, okay? And you can go maybe 1 to 1, 2 to 1, 3 to 1, or just go for the measured move target. Just expect, there it is, there's a leg, another leg, and finally, we're going to push and get that target meet, and that's where you take profit. So what do we have now? Well, we have a channel, right? So here's a leg down, pull back, another leg down, pull back, and here's a third leg. You got a wedge there also. What is a wedge? If it's a wedge bottom, that's probably an inverse head and shoulders, right? So, but to me, the target was, I'm sorry about that. To me, the target was or is right there. So you see how we just got there? So if I wasn't talking, I would have traded this. In fact, I would have probably both this right there or both this pullback bar at the close immediately. And this is where I would have taken profit. And then I would look for a pullback to see what the market is going to do. But this is where I would initially take profit. So here, see how, if you wonder how I found it, so I'm looking for basically a wedge. Okay, so let's say I found it, whether it's climactic or in a really tight channel. You see these areas, this right here, that right here, this right here, that right here, super important. So this is basically your impulse first leg down. This is 1 to 2 correction. This is your second leg down. This is, okay, 3 to 4 correction. And this is your third leg down, but it's actually the 5th point. So sometimes you look for a double bottom there, or triple bottom, or you look for a total reversal. But really the most important thing is your target, okay? Impulse, correction, impulse, correction, impulse. Or Elwood said, first push, pull back, second push, pull back, and then the third push. So from that correction to that correction, okay, put a projected line. But really your target is that. So remember how L teaches wedges. So if you're buying this, whether you saw a high or low double bottom, or you saw a reversal, maybe inside bar and another follow through bull bars, so you see the pressure, bulls are coming in. They're really actually the bulls are bears taking profit. Bulls are jumping in as they see confirmation with the second or the third bull bar. Where are they going to go? Right there. Now we could get a rejection if the channel is steep, but most likely we're going to go and test that horizontal line. So, and if we do break above it, then this push, which is the second leg down, starting point is your follow through, okay, bull target. So that's how wedges work. Similar to inverse head and shoulders breakout scenarios. Okay. So we did test that, and now we're pulling back down. Why are we pulling back down? This is a retest of, this is the last bar that made the low in this 3-push wedge down. So basically, we're coming back and testing that range. Okay, so bulls are looking to see if they can actually buy this again and maybe go up and make a double top with this. Now, if the bears continue to sell this and they breach all the way down here, you're not buying this, obviously, because it can break down and come down all the way to here. Why? Because we had some kind of impulse leg up here, paused, and another leg. So this is a buy zone right here. So chances are we could end up selling, selling, selling. I would like to buy somewhere here because there are a ton of stops here, institutional stops there, stops, maybe sell stops. Some institutions are looking for a breakdown and get this measured move projected all the way down. So they're looking to bring the market furthermore down, okay? Or there are stops for these buyers. So many institutions want to run those stops down here. So this becomes an area of interest to me. So if bears break this low, bar 28, that means there's a potentially, okay, they're going to keep pushing down here, and that's where I want to buy. So I'm watching bar 28 range with what the market is going to do here, okay? So now you can also say, all right, no, I'm not ready to sell this because if this is a bear flag, I'm looking for some kind of, okay, wedge, right? So here's a first push, pullback, second push, pullback. So we might actually go back up again, either make a double top or triple top wedge and a lower high, and then you can sell. So I'm watching that as well. Plus there's a channel there. So I can mark this in so many different ways. So you have a channel, right? Right, so we got already a rejection at the channel, right? So now for bulls, they can prevent this from selling. And what they can do is they can try to break out of this channel and go back up, but we still get that possible wedge push top and a bear flag, or maybe a double top somehow, okay? So I'm not really keen on buying this just yet. And the way the bar 31 closed, it's basically a kind of a 2-bar reversal here. And a rejection at the high of the channel, we could end up coming down here again. So I'm watching the midpoint of that channel if you're trading with channels. I don't. But I wanted to show you. What's important to me is that what the bulls and the bears are going to do here. So, you know, there's a fight here, right? If I just actually have a mental invisible line at the midpoint of that bar 28, I'm watching to see what the bears are going to do here. Are they going to close? If they do close, chances are they want to break down from the bar 28 low. What the bulls would do, well, they're trying to prevent bears from going down there and completely prevent a follow-through second consecutive bear bar, and they're trying to prevent that midpoint of that bar 28 range, you know, getting broken. So that's why we're stalling here. But I'm not interested in buying, not yet anyhow. I would like to see a failed follow through for bar 31 first. That means I would like to see bar 32 completely close last second on its high. That will be a failed follow through. And the market staying above that invisible midpoint, okay? And closing a bull bar right up here, then I'd say we're going to go up and we're going to make a new high to make that wedge top before we even have an attempt to come down. So it's, as I explained, it's happening, kind of. So we have to wait for this bar to close because bears can still continue. Their goal is to, okay, this area is basically a positioning area. This is a balance zone because markets sold strongly, okay? Bears are not letting it go. So they're probably seeing a lot more complex, okay, head and shoulder patterns. And this is their neckline, basically. So they want to break this neckline. Again, I'm reading in a different way now as I see a bigger head and shoulders, right? Now they want to break that, diagonal neckline with a bear bar, get back up, retest, and then sell into the low of yesterday, test the bar 66, possibly get some kind of measured move down. Can they do it? We are in a trading range. If you look at yesterday, well, that will be Friday. So we're in a bigger trading range. So to me, if I'm going to trade this, I'm going to trade it as a trading range. We are kind of slightly below the midpoint, okay, 50% of this trading range. So that means if I divide this into 3 sections, okay, 1, 2, and 3, as L would do, this becomes a sell zone and this becomes a buy zone. This becomes a do nothing zone. So if I'm going to buy this, I want to see market move the price all the way down here, and this is where I want to be a buyer, because now this is a trading range. And that, hence, the area that I found earlier, and I said it's a buy zone, okay? So this tells me as long as we stay below that 50% of that trading range, we can come down here, and this is where I like to be a buyer. Okay, so I'm still watching this area. You see how we're stalling there, and there's a reason why, and I just explained those reasons. So these are the things that you have to look at it as a retail trader, okay? And for the institutional side, this is where the institutions could be positioning themselves to sell this again, because they kind of know that buyers are waiting here, and until price gets down here, they may not touch anything or invest in and buy. But the retail traders will see some kind of possible wedge scenario, so they might say that this is still going to go up before coming down, and the machines might be looking for that third push up also. Okay, so you see that follow through totally failed. Where is the second bear bar? Bar 32 is not a good follow through, is it? So the fight continues. And if you look at my Globex chart, look where we're resting. We're right at the midnight open, US midnight open. So market kind of wants to stay bullish. So they're fighting, but look how many bear bars. 1, 2, 3, 4, 5 bear bars in a row and a one single bull bar. So, and that makes this area very interesting. If we do get a bear close right here, selling could continue all the way down to the low of Globex range, and we could test it. But I don't know yet. All I know, where I trade on the 5-minute chart, bears fail to get their follow through with bar 32. So that tells me the bulls want to go back up and test to see what's above bar 30, and that could give us that wedge bear flag. So this is where you become patient. And plus, it's midday. All right, so it's 11 minutes after noon. It kind of slows down. Plus, I think the volume might be low, although I don't really look at the volume, because I think the Jewish New Year's just started. So it's being observed by many traders around the world. So there's that reason. But, you can trade anything as long as it's not half day. I don't trade the half days. I don't even touch it. Those are US holidays. Okay, we're still stalling here for all of those reasons I explained, and if you're wondering why. So earlier, basically, I bought this bar right here with one tick above. I thought it was a really nice, second entry long. And then bar 6, I added more, and then I added more, and I scalped out somewhere here, which was great. Then I think I sold this bar right there, and second leg, I took profit right here because you know there are buyers waiting either at the EMA or below the EMA. Now, we had no continuation for bears getting a gap bar. Bar 16 is yes, it's a close below the EMA, but look at the lower wick. So that kind of prevents, you know, bears from getting that gap bar close. Now, if bar 16 were to close with a really strong close with almost no wick, or maybe a 1-tick or 2-tick wick, I would have continued to sell this and not have taken any profit, because chances are it would have gotten some kind of, you know, follow through, but it didn't. So bar 16 low was basically that wick was basically telling you that the profit taking already began. But no good follow through. Inside bars, inside 3 bear bars, that's generally inside failure of a big bear bar. You're gonna get another leg, and now you get your gap bar. That's probably gonna get 1 or 2 legs down. So, and we're breaking the bar 9 low, like I said earlier, and we're going to probably test that double bottom, but really this is the area I'm interested. So if I'm selling, I am definitely going to take profits smack in the middle of that area of interest type trading range. And that's what I did while Tom was talking, and I was done. Now I'm waiting to see what is going on here. So the bulls are not doing anything here, but bears are not able to do anything here. I have 2 dojis now. So is this a continuation to break the low of 28, or are we going to finally reverse back up because it's maybe too low for bears to sell underneath the EMA? They might be looking for a pullback to sell a little bit above from the EMA. From above the EMA. So it's possible that is the case, but I don't know. I don't see any bull bars. I'm not interested in buying anything here. I'm interested in selling. It looks like bears want to break the low of 28 and get down to the high of 66 at minimum, and possibly low of yesterday is magnet. And we might even test below the low of yesterday just to see what's underneath, because it happens to be the low of the trading range. But we'll see. I don't know yet. Market is deciding basically what to do here. Now, if, say, the bulls showed up, okay, so bulls showed up here, and where would they say? Well, look up, right? So you see these. From there to that low is already a resistance. It is also somewhere here. We might actually breach that resistance a little bit before coming down. Why? Because we have a gap bar, bear gap bar. So we know there are probably sellers are waiting there. So if we do go up, okay, 2 dojis, and if bears are, you know, failing here, that could, and if this bar 34 closes on its high, above that yellow box high, why? That's the bar 28 high, basically, okay? If we do get that bull close, that is your second entry long after a 2 doji from the inside of a pullback zone. So that means, could this be a swing? Could this be the start of a swing and a rejection, and we go all the way up here and test today's highs? Could be, because this actually looks like a big bull flag, doesn't it? Wedge bull flag inside a trading range. So, but that's the problem. So anytime we get some kind of a, to me, any kind of a bull breakout, that could end up being a leg in a trading range. So I don't know if we can actually break out from these highs. And on the daily chart, I still have this area that we did test. I don't know if you guys follow along on Friday how adamant I was that we were going to come down here. We did. We actually came so close to it. We did not test the inside of that area. So can we sell the rest of the afternoon? It's possible. We can even maybe break the last week's low and come down further. So that would be 3630. Yep, 3630 area, maybe underneath a little bit. Could be where bears want to test before we go up. I don't know. We'll see. So because last week we got the second leg down, okay? Look at the weekly chart, right? So let me make this a little bit larger. Let's go over it a little bit, right? Let me add a little bit more information here. Okay, so this is that wedge target that I talked about earlier, how I found my wedge target, right? It's a similar thing right there. Anyway, so we have 2 legs down, so we did come down, right? So we're at the lows, but there's a magnet here. We could continue to push. This is the weekly. Now, if you look left, see that breakout point right there? There's a little bit of gap there from there to there. So I'm going to maybe here, maybe this whole area. Looks like still an interest for bears. So we could continue to push this, okay? But what bulls want is that they see this 2-legged down. Now, move down. They want to go back up. They want to start buying. We have an inside. This week started as an inside. So if we do keep going up, we might end up going up to these highs, make a double top, and then come down, okay? So, but that would put us into another trading range here. So we're already in a trading range. We're just testing the lows. But there's a little bit of continuation. There's a room to sell a little bit more. That would be nice. But now is the time to do it. Otherwise, rest of the week could be actually bullish. But we're so close to the 200-day moving average. So we'll see. So I'm not really bullish just yet. And on the monthly, I do have a measured move target for bears and then a magnet all the way down here. So you see why I think that the bears could break this 28 low and come down here. And this is why I just didn't want to buy. So what happened there? Well, 2 bull bars, 1 doji. None of them closed really strongly bullish. There's nothing I can do there to buy. And they kind of got a lower high there, you see? Maybe down, up, maybe that was the wedge right there, and we finally got a lower high, and they're trying to get another sell signal. As soon as that bar 35 closes 1 tick below 28, we might keep pushing this down. But this area is support, and many machines do see that, and they might want to come down and test it. And instead of selling, we could still pull back. However, okay, we could end up coming down yet again, maybe the 50% pull back and then come back down. So I'm not really bullish at all. I'm looking for reasons to sell this if they do sell. But if this area is holding, I need to see strong bull bars, okay? Then I will say, there's a gap here. You can see the gap, okay? And I want to see price actually held here strongly, and we start to get bull bars. Then I'll buy. But I have no reason to buy because it looks like they want to close that gap and continue to come down. And there's a gap right here, okay? And this is what they want to test, which is right here. So we break this, we come down here. And nobody wants to be stuck in that. All right, bears are trying to close a bear bar underneath the midnight open. That would make us bearish and could help market come down here to the Globex low quickly. Now, I do have a micro double bottom there, but it's really the equal lows, okay? And there could be a bunch of stops here, and that makes this area a much better buy zone. So again, I'm not excited about buying anything here just yet. I'm going to give room to bears to flex their muscles, watching this bar closing below the low of this box or the low of 28. Basically, this box is the range of bar 28. Then you would get some kind of a measured move down. Your measured move, if you do get that bear bar, your measured move will be right there. I don't have it yet. I need to see a bear bar closing on its low to get that confirmation, but I'll just leave it there for now for reference. I don't like to measure ahead of time because it's kind of you're conditioning yourself that this is going to happen and the 36.6250 is what we're going to test. That may not be the case. So just wait for bar to close. That's it. You get a really nice bar close. So you see now how this wedge reversal completely failed and the bears have the upper hand. So now they're coming down into this. I'm going to get rid of this now. No longer interested there. This gap area is where bears want to possibly test. Globex low is magnet. Low of yesterday is magnet. What I'm interested in is the range of bar 66. I want to see bears come all the way down here. This is just a gap. My gaps are generally white, so I'm going to stick to my color coding. Okay. But what I'm interested in, this right here, this buy zone. Okay, that's what I want to see tagged, this area. This is where the buyers are. Okay. So, big bear bar, good breakout bar, and if bar 36 closes on its low, then you have a follow-through bear bar. That could create continuation into the gap zone. But what if this bar totally fails to close bearish? Then you have a failed follow-through. So I don't know what the future holds, so I have to wait for this bar to close. So if you sold, your stop is, you're swinging this down, your stop is above bar 30. I like to see continuation. Possible bear target, scalping target, 36.7250 is where bears are trying to get a test. Okay, we're going to briefly bounce there most likely, 72.50 after we're testing. But if we close another bear bar, we might continue into 68 to 66 area, that 2-point area, 68 to 66 area. That's the area where we're going to get a much bigger bounce as bears continue to sell. So we're heading towards my scalp target, 72.50. Let's see if they can actually tag it. 72.50. We are testing the gap. We're closing the gap a little bit. That gap is now diminished, smaller. We just tested my target and I said it's going to bounce. It actually tested, not only tested 72.50, it ended up testing 3 ticks below. So it filled pretty much everyone. That's good. Now, if they do close this bar somewhere near 72.50 or 72.25, okay, at a minimum 72.25, we get a bear bar, we could end up selling into 68 to 66 area, which puts us right around the zone, that buy zone that I talked about, which is also the bottom of the trading range. So we know buyers are there. It's that this gap bar from Friday, 67, is the problem. But look how they came in and closed that gap a tad little bit. So if you sold the close of this Merbazu, what is this bar? That's not Merbazu. What is it? It's When Diesel bar. Bar 35 is basically telling you it's a strong bar. When Diesel is a strong dude. All right? Think about it. that means it's going to get continuation no matter what. And that was your follow through. So try to remember that. Morobozu in Japanese, I think it's called bold, like the bold man, like the guy with no hair. Yeah, Dwayne Johnson, that's it. So yeah, I mean, I just kind of thought of Vin Diesel at that time, you know, someone strong and bold. That was the explanation. All right. So let's see if we can actually. I'm just worried one day I'm going to get an email from Alberts. Cut the crap, Rose. Just stick to the Morobozu. I'm just worried about that. But you got my point. So let's see if we can continue. I'd like to see a little bit more continuation. It's obviously bearish. Last week's low becomes its magnet, but we shall see. There's a big, I mean, you see these wicks right there on the hourly chart? That's a problem, okay, because that's kind of a support area here. Now, bears want to break that, so they want to test what's underneath. But they're going to have to make this hour, what time is it now? So this hour is ended, so we have a new hour begin. So we might end up testing the last hour's low a little bit before going back up. So this could continue to come down here. I really want to become a buyer somewhere here. I do have a measured move target. Let me adjust that a little bit. Okay, that's better. So 6250 is still the measured move target, but as we get closer here, some buy orders will get activated. Generally, these buy zones, about 1 point above, buy orders are stacked, okay? They're not just inside or at the low. Buy orders are stacked 1 point above at least. So you're going to start to see some stalling as we get closer to that green area. We're at the Globex low. Bears want to break the Globex low, and they want to sell. Can we sell? Well, we got equal lows here. There are a ton of stops, and there's some institutions their stops are there. Some institutions are getting ready to sell for a breakout and a measured move down. That would be catastrophic for bulls. So I just want to see continuation down here. So I'm not interested in buying anything. Bar 37 is filling the wick of bar 36. That is bear pressure right there. If they do breach the 36 low, that means there's no possible micro double bottom and we could continue. We just breached it, so it's coming down. But this is a 20-point sell, okay? So there will be profit taking right here at the 70, 25, 70 area possibly. If I measure from the top of this last cell, this climactic cell bar, 35, that's basically a 20-point. Now, if we do reverse, you see that climax bar, 35, we're going to come back and we're going to test the middle of that, eventually the top of that. So we're going to come back to it. But I'm not ready to buy anything. All right, so don't rush your buys. Don't bottom pick anything. This still has room to come down. Bears want to close that gap. Bulls want to keep that gap open at least with single tick. So they're going to try to prevent that 66.75 from being tested. But come on, I think we should just come down. In fact, we could actually test a little bit lower bar 66. That would be low of yesterday. Buyers are probably right here underneath or at the low of yesterday, Friday. I said that this hour will test the last hour's low. And that wick right there, they're trying to break that because there's sell stop orders underneath. There are also buy orders underneath. So it's an interesting area. They're trying to go there and test what's there. Okay, here we are. So aren't you glad that you didn't care to buy here with that pullback? Bar 31 kind of made it very difficult. And you see this is a total fizzle, and you just sell. Breakout mode from you mean the first bar right here? The first bar of, are you talking about, you mean like we're breaking below that and we're getting a measured move? Sure, there's a much bigger measured move here. That's what you're asking. It can still continue down. In fact, this is the low of the trading range, right? So let's measure how many. That's more than 10 points. We may not meet that measured move. We could end up coming down to 10 point right there, okay? And if we do breach it, we could come down to maybe 5 to 10 point area and then bounce. So that would allow market makers to actually run a bunch of stops here, kick people out of their positions, enter other people who are trying to go, institutions trying to go long. So those who get kicked out, these bulls get kicked out of their positions, they see bull bar stacking, they're going to be inclined to jumping in to become bullish again, and that would accelerate the bull closes. So if you're trying to go for this measured move target 36.47, you may not get it. See how bulls are trying to keep that gap open, even if it's a couple of ticks or a point. But I think 3 bear bars, I'm not inclined to buy this at all. This is just a bunch of chickens taking profits. If they get out of the way, we will keep selling this. But pay yourself, because we're approaching the buy zone. And like I said, about 1 point above this buy zone, buy orders are there. Because these bears see that and they know that, machines know that's the case, so that those I call chickens are covering some of their sell positions, but it's too early to buy. So once they get out of the way, we will continue to sell, at least a little bit. Now, I do want you to also pay attention to the micro double bottom with 30, 37, and 38. So that's what bulls want. They want to see at least the micro double bottom, but this isn't a good place to buy, not yet, not with that kind of bar. 38 might be closing on its low. That would only excite bears to sell a little bit inside that buy zone and perhaps the test of low of yesterday. So I'd just be patient here if you want to go long. Unless the bulls close a strong bull bar, right now this bar 38 low is equal. So if they suddenly last second in 1.5 minutes, that body goes all the way up and we suddenly just breach the high of 37, that becomes an outside up bar, and that would become a 2-bar reversal. That's fine. I'd be maybe interested, but you'd be buying against a tight bear channel. Chances are it's a minor reversal or minor pullback. We're still going to get another leg down. So I'm bearish still. Oh, the point system for the 20 point. Why did I? Because this is still bullish, that bar 30, you don't have to. You could just measure from here. You can use that pivot point. But really the selling, where did the sell? If you look at bar 34 and 35, just let's be logical here. Where did the selling begin? Actually begin? With bar 35, right? You would think. But you don't have to. The distance is so little, you can actually measure from there. But that would put us beyond the 20 points. So they're still pushing. They're trying to get down to the 40 point right there. Okay? If you measure all the way from there. I want to see something. That's more than 6 points. You see that? That's more than 6 points. Anytime market makes more than 6 points, okay, it's basically showing you, hey, I have a small trend here. But trend is only become trends or initial trend if it makes a solid 10 points, 9 to 10 points. Because that means these bulls who actually bought and moved the market about 6 points, they're getting to the 10-point mark, take profit. Since they could not get it, okay, you can even actually measure all the way from top here, right there, for bar 31 high. Then the 40 point is right here, okay, so we continue to sell possibly into, this area. That would be just the low of yesterday and the low of this Friday and Monday trading range. So either or, I'm just trying to get a feel of where I need to start taking profit or I can have my runner run into. I constantly measure how much the bulls and the bears move the market to see who has the upper hand. So hopefully that helps you. Bears trying to break below the Globex low with a bear bar, and on the hourly, which market wants to test what's below the last week's low. This area, that possible magnet, we met my target last week, that green line, and we're probably going to test inside this area. So 3630 area, 3630 is basically what I think the market might test, but they have to accelerate. They have to break this area and really accelerate down. 3630 is down here. So I'm not 100% sure we're going to get there. So we might end up actually maybe testing again here and then go back up. So I don't know. Unless I see really strong breakouts suddenly by bears, then 3630 is right here, and that's doable. But I don't see that. Right now, this is what I'm interested in. Right now, I'm looking for at least this measured move target to meet, and then I'm going to look to buy. Yeah, we have some kind of double bottom here. That gap is still open. Bulls are still trying. So we're going to keep this open one tick, but that's going to be closed. Then it's going to be gone. I'm just going to get rid of this. Okay. We're so close to the low of yesterday. We should test it. Somewhere around this area where the buyers could be. So if you're still selling, just wait for this bar to close bearish and then move your stop above bar 38. Because if bulls do show up, we could suddenly start to close bull bars. You do not want to give all this back because this bar 35 is going to be the magnet. The middle of that bar is going to be magnet. Okay. Definitely bar 28 low we would end up testing, right? It's a breakout test point anyway. So all the way to the midpoint of 35, we could end up pulling back. So you do not want to give all that back. Okay, gaps closed, and we are testing my buy zone. Right there, I think. Yeah. So if you held it all the way down there and you paid yourself a little bit, good for you. Measured move target is right here. But this, because we're testing an objective area, some bears are already taking profit. Now, this is a spike, pullback. We should get down a little bit, maybe grind a little bit down, at least to here, I'd like to see. Then I like to look for a pullback to the bar 38 high at minimum, and then continuation to the bar 28 low, and then the 50% of bar 35 for bulls. But I'm not ready to buy anything yet. I don't have the signal yet. So this can still continue to grind down a little bit. 5 for bulls. But I'm not ready to buy anything yet. I don't have the signal yet. So this can still continue to grind down a little bit. I'm gonna end my session at 1 o'clock because I'm getting hungry. Sorry. What would be a good buy signal? Well, definitely not this bar. They're trying to get a first entry long by going one tick above bar 39. But would you want to buy that? No, not against this bear channel. So if you do buy it, you might end up getting stuck there. If it does go up, then that's, too bad. I was wrong. Nothing I could do about it. There's a wedge here, 1, 2, and 3, and there's wedge 1, 2, and 3. Okay, so machines do see it, and they're trying to put that first entry long. Okay, they might say, okay, this is good enough, let's buy it. That bar is now becoming very strong, but will it close strong like that? Now that's the question. I don't like to buy the first entries. I like to wait, market to come back down one more time, and then enter me with a second entry long. But regardless, those actually ended up buying with a stop order one tick above 39, maybe even bar 38 high. They still made money, so good for them. I'm just not that excited to buy this because it can still come down. Could be a minor reversal. Especially if a second bar closes below the Globex low, then you would be very upset because that would be continuation breakout of the Globex range. Don't want to be stuck in that. Now, on the hourly, we've done what I said we would do, which is to test the prior bar's low. So that's good. We're also in the buy zone. That's good for bulls as well. Now, when would I be so inclined to buy? If this bar closes like this, to me, that's too risky. Okay, we could end up coming back down, retest the high of bar 39, and then fill everybody. Now I would love to enter with that. That would be my second entry, higher low, go long. That could end up being the major trend reversal. So I'm going to be patient. Bulls are still trying to get up and test the bar 28 low, but that's kind of now pretty strong. But we're going to come back down again. Let me see. Tomorrow we have, wow, Evans is scheduled to speak, I mean, before the crows wake up. It's like he's scheduled to speak at 6:15 a.m. Eastern time. Okay. I'll be sleeping, but okay. So durable goods at 8:30 tomorrow. James Bullard scheduled 9:55. Consumer confidence at 10. New home sales at 10. Goodness gracious, that's a lot. And then Wednesday, yeah, this week ends up being a Fed week, I guess. Econ week. Let me see. I'm looking to see if he's scheduled. Not Wednesday. Not Thursday. I don't see his name, but I'm sure he'll come up. I'm sure this will be updated. There's GDP and jobless claims on Thursday, 8:30. That'll be a epic press section. I just want to point out something here. Okay, so take a look at the low of this bull bar and that bear bar. Yes, this is nice. Now, maybe, I'm second guessing myself. Why didn't I enter? I don't know. I'm still not excited about it. because we could still come back down. Would have been nicer if this bar was an outside up bar. It's low, lower than the prior bar's low. Since it's not, they're still trying to get back to the breakout test point, 3681. But there's a big bear gap there. So we could end up coming down. Bulls are trying to swing this though from the lows. So they're trying to set up a swing here. I like to see some kind of higher low at least. Now, if we do close another bull bar here, bulls are going to try to test 3684. So I'm going to wait to see where this bar is going to close. If they do close it, now you have strong bull gap. Okay, so bulls are now gapping up. The next, they're going to try to get to 3684. Can they still come down? They still can come down. I'm just going to see where they're going to close this bar. But they're trying to switch the trend now. They just tested the bar 28 low. Sometimes you're going to get these and you're going to wonder, why didn't I just buy right there? See, I missed it because I wanted to see a little bit more further down. So what happened to this measured move? Well, they could still sell and come down, but at this point, I'm done with it. This is just too much of a move up. In fact, they're trying to get to right here. They kind of did. So they're taking profit with that upper wick. They might, if I measure from one tick above here, 10-point scalp is right there. They could still push. So I kind of missed my entry. Could I have bought the close of bar 40? I didn't want to buy against this gap, and I'm okay with it by missing this move. I'd rather look for a pullback and buy that one. Right now, these bulls who bought above 39 kind of got the 10-point-ish scalp. Okay, so if they do close this bull bar above 78.50, they're going to try to continue going up to 84, 36.84. And if they do close above it, then they can actually take the market all the way up to 36.93. So be prepared for that. All right, so they did close above where I said that they would. Now, okay, so 10-point scalp is right there. Those who bought one tick above 39, are they trying to get some kind of V-shaped reversal or some kind of leg in a trading range? It's possible. Now we have bull gaps. I'm still going to wait for the pullback. Because at this point, I'm too late to enter, right? So this will happen many times. But 3 bull bars, buy the close bull bars, and the last one is actually gapping up. This is good bull pressure. We'll get a pullback. But good momentum for bulls. So they did not come down where I hoped they would. You know, at some point you have to, give up for bears, right? You can't expect, especially now that we have 3 bull bars, momentum bars. So this is really good for the bulls. But we're not always in long yet. So we need bull bars closing above EMA and opening above EMA. So can the bears still sell this right here? Possible. I would wait for the pullback. Okay, so we ended up going up to the target, 36.84. Now, if bulls do close above 36.84, their continuation target is the climactic bar. Okay, start point. where it opened. Okay, so maybe even a little bit, yep, so maybe around 89 or the start, 89.50. So I did say that if we do go up, first we're going to test the 28, we're going to test the 50% of that Merbozu bar, 35, and we just tested it, 50% of it. So they're taking profit, but the goal is to really get up to here, 89.50. Now, I would, if you went long, good for you. If you didn't enter with the close of bar 40, you could have entered with bar 41. We gapped up, so you could have added more. As soon as you see that gap in between the two bars, you can actually add more and maybe take profit either at the EMA or the 50% and leave a runner to go up there, or maybe a point below or a couple of ticks below, so you would take profit early. Since this is a trading range, open of the day tick price becomes magnet, right? So now here's my take on this. We left something behind. Okay, so also on the Globex chart, this is bothering me, this right here. And this is also bothering me, okay, that we left low of yesterday. We came so close. Can we sell and come back down and finish the job? Yes, I've seen it happen before. But I don't want to sell against these three bars at this point. So I'm going to let the bulls do what they do best. Finish the job, maybe test that, or test open of the day, and see if we get a rejection, and then we come back down again here. So I would take profits, okay, so you don't give back. But three bull bars now, market might be looking for a pullback to buy and go above the open of the day tick price. I didn't enter. I kind of missed my point. But if I wasn't talking, I see bar 41, I would have jumped in because there's enough room to the EMA and the 50%. That's where I would scalp out. At least I would make something and not feel like a loser that I didn't enter down here. Yes, there's, you could also think of this as a V shape, but there's a channel here. Okay, so we're testing. I removed it, but that, the top of the channel is there. Okay. So can sellers be right there? Possible. Why? Because look at this impulsive sell. 1, 2, 3 bars and a small leg down. That's the continuation, which it didn't continue, but that makes this area sell zone. So we could still continue, maybe test around here, but we could still sell. So those bulls who bought, they entered with a tiny little risk, okay, by seeing that market is finishing the objective by actually testing the top of the buy zone and no continuation. They could have taken this, okay, this is good, let's buy it. And we could not even come down to retest the high for a second entry, and then the buyers close again. You would add another contract. You have to take profit. So they're taking profit. That's what's happening here. So can we get maybe another, maybe like a couple of pullback bars and then see if the bulls would show up again? It's possible. Bulls want to go back and close above the midnight open and become bullish yet again, but since I don't have bull bars, I'm not anticipating to go up here just yet. Okay, so when buy zones, say you have market was in a trading range maybe at the highs, right? This is coming from down bottom, and suddenly we sell this, okay? We're selling and selling. We have impulsive, okay, move down. But we had an impulsive move up. That buy zone, when you can start to count maybe 5 to 8 bars, and then it tries to come down. Sometimes it comes down and tests it before going back up with a huge swing. Sometimes it comes down, never touches it, gives you a higher low, and then slingshots it, which is a swing. So count how many bars, right? 1, 2, 3, 4, so far 5 bars. Sometime between 5 to 8 bars, you know, I look for a second entry long. I didn't do a good job with, okay, here we go. So that's right there, touches the high of the channel. You're trying to sell against 3 buy to close bull bars. Now, look what just happened here. There's a structure here. See this structure? We went below it, but we didn't stay too long. Then, with vengeance, we went above. So we're bullish. Sentiment has changed here to the bullish side. But then we came down, okay? But look, we did not make a new low. There was a small inner structure we broke down, but now we're not going above it. Bulls need to get above it to become bullish again so that we can go and test the highs. If we cannot do that, chances are we're going to come back down and test that low again. So this is why, you know, I wanted to see bears kind of do that a lot earlier than putting a 3 bull bars like that. But market does what it does, so I have to adjust myself accordingly. So I'm expecting, okay, bears to come down. So far 1, 2, 3, 4, 5th bar. By the time the price comes down here, it'll be an 8th bar, possibly. And then I'm going to look for my second entry. Now you understand why I wasn't so excited about entering. Yes, I missed this, but who knows that we're going to go that much high, right? Because these buy zones are generally tested twice. Sell zones are generally tested twice, okay? So I'm either waiting for a higher low, buy signal, or a little bit more continuation and maybe a double bottom, or lower low and a double bottom with this and go. Or market is going to come down and finally finish that job at low of yesterday. Because think about it. If you are in a trading range, and I kept saying that we are in a trading range, as price comes down here, okay, nobody wants to sell here. Nobody wants to sell a little bit above. Bears want to sell higher. They want to sell the pullback. But before they sell, they're going to trap the bulls, okay? What they're going to do is they're going to make the market look so bullish. And that's another reason why I didn't want to jump in and buy. And because we broke an inner structure here, even if it's a small structure, but it is there, we strongly broke that. So and then we did not go above it, so we're still bearish. That's basically a lower high to me from the channel highs. So I'm not interested in buying still. I want to see what the bulls are going to do when they come back in for the second time. That's when I'm going to enter. Because I have a better chance of swinging this higher than buying here or here. Now, if they do break it, then that's fine, because if we break that midpoint of this channel, this is where we're going to come down, which was my original plan all along. So I'm still patient. I'm still waiting. I want this market to come down and retest this buy zone for the second time. Then the swing, if the bulls want to swing this, then they're there, okay? But they're going to show me. If they don't show me, I am not going to buy it. I need to see that signal bar. I don't see a good signal bar here. Where would I sell here? Well, basically, I would have probably entered with the close of this bar 43 if I wanted to sell. Then I would grab maybe a point or two, since ATR is 7.5. The half of it is like 3 points and a quarter, say, or 2 quarters, right? And I would have probably scalped about 3 points and get out of the way and see if I have a runner coming in here. But at this point, I want to be a buyer, so I would somehow get out of that short as it gets closer to the buy zone. Now, I talked about this is problematic. That bull bar did not go beyond it. This right here is, I have seen this many times happen, and that basically what you're getting here is a fake bull move up, okay? And I pointed out to you, hopefully you guys paid attention. I just want to see what they're going to do. Are they going to break below this low of yesterday and then find buyers and then just reverse back up? So it's a little bit after 1 o'clock. I don't have a buy signal bar yet, but look what's happening there. That mid-channel line is holding. Bears are trying to break below it and continue to sell. Some machines see that and they take profit and then see what the, what that bar is going to do and where is it going to close. If it closes beyond that, below the mid channel, they could sell. Now, you see this bar 40? So bar 40 low, I'm going to see if we can test that. Now, price can come down all the way to here, and without closing any bear bar below the low of that 40, we can finally get some kind of reversal. So I'm going to be watching that as well. But if they do breach the low of bar 40, which is a strong bull bar, that means selling continues. I'm not ready to buy anything. So I am still bearish. I did say we could sell this. I don't have a bear bar yet to close below that mid-channel. We're literally trimming that mid-channel line, as you can see. So bulls are trying to prevent that. But I think we're going to test the low of open and low of bar 40. But be prepared. Buyers could show up there very quickly, and then we start the swing. But bar 44 is a continuation bar to the 43. That makes bar 43 and 44 strength bear bars. That means expect a little bit more move to the downside, to the open of bar 40. Especially if they can close this bar finally below that mid-channel line. Then we continue and test that open and the low of 40. So now we have 1, 2, 3, 4, 5, 6, 7 bars. I said just about 8 bars minimum we should come back and retest the buy zone if you're looking to buy. But not yet. We don't have a signal to buy yet. Okay, so this can still sell into the low of yesterday. Okay, so we're testing now, but that bar hasn't closed yet. But you see how bears just made it come back down? Why? Because of this nonsense right there. This wasn't bullish enough. So now originally my arrow was pointing right here. I said we're probably going to test it there because we kind of left it behind, and look where we are. And here comes the bears again on the hourly, last week's low, attracting them. Buyers are probably 5 to 10 points below the bar 66, waiting somewhere here. I can hear Brad saying, buyers are probably right here waiting, and they're going to buy. And he's right. That's how the trading range works. Institutions will buy these lows. Low of yesterday's magnet, but I'm watching how this bar is going to close. As it comes down, but if it cannot close a bear bar below the low or right one tick underneath where the bar 40 open, and suddenly we have a huge wick, bulls are going to jump in. So right now I have no signal bar to buy anything. I have to wait for bar 45 to close. There is still 1 minute and 40 seconds. Bears are trying to close this first bear bar below the midpoint and continue to come down and test the low of the channel line, that trend line. And if you're not using any, I'm just going to get rid of it. I don't really use channels, but I want to demonstrate why there were sellers waiting. Okay. Now I'm watching how this bar 45 is going to close. You should have sold up here. If you're trying to sell down here, I explained why it's kind of difficult because you're selling inside a buy zone and it's getting tested for the second time. And this right here, like this is where I would have taken profit, okay, and I would have already a runner running, but I will not have sold here. I would have taken profit, okay, and I would have already a runner running, but I will not have sold here. You could have also sold 44 close because 44 is a follow through for a breakdown bar 43. So it's probably going to get continuation, right? So, okay, so they closed a bear bar. Good for the bears. It's because they're trying to get to the low of yesterday. Put that right there. So I still don't have a buy signal bar just yet. And bulls couldn't stop this bar from closing, okay, somewhere here. So that means bears are still targeting a low of yesterday or this red line right here. I'm expecting bulls to show up soon. There's a wedge here, 28, 39, and 46 lows. But some bulls are buying. That's thinking this could be the second entry. I don't know yet. The bar has to close. Bulls are trying to put a failed breakout here for bears. Because if they do close this bar strongly bullish on its high, that's a failed breakout for bears. But the bar hasn't closed, so you can't really judge it. Because if you measure, okay, from, let me see, that's a 20-point move right there. See that? So that basically bar 46 is a take profit. No one's buying here just yet. I don't have a signal bar. All I got there was a 20-point move down, okay, and the bulls are taking profit. Or if you measure underneath here, that's about 15-point scalp, and it just breached it a little bit because ATR is too big. Okay, so, or if you measure from there, that's a 10-point scalp right there, okay? If you sold that bar, so these bears got a 10-point there if they sold here. If they sold underneath 42, which I would not have, right? So you don't know. There could be buyers waiting there. So if you sold a close of bar 43, then you got a 10-point, and that bar happens to be a pullback bar because these bears are covering some of their short positions. But there is no buy signal bar here for me to buy just yet. So low of yesterday is right there, so just hold. I think this is where they're trying to test right here, 36.60. See? Plus, we haven't tested my magnet zone, so we might still come down a little bit. I was going to leave at 1 o'clock, and it's now 20 minutes after 1. I just want to see if we're going to reverse here anytime soon. Just waiting. looking for a good bull close, bull bar. Because its low went below the low of prior bear bar. And if they do close this bar, taking out maybe 70 to 80% of that prior bear bar 45, that's a good bull pressure. We might end up getting finally bull bars. And we could go right back to the climactic bar 43 midpoint area. All right, so bar 46 closed above its midpoint. I don't like the way it closed. It's not that strong, but there are buy to close bulls now buying, and they're trying to fill the wick, okay? And they're trying to get continuation. So that's a good bull pressure right there. But is it a good buy signal bar? So let's see if they can actually close this bar bullish. Then they might actually buy and finally go back up. There's a wedge, there's a wedge, wedge. So there's two of them. There's a double bottom. My only problem is that it is not a good buy signal bar, 46, and the low of yesterday is still looming, so close by. I'm just not excited about buying this yet, because we can still continue to sell. If we do break below bar 46 with a bear close, we're going to come down and we're going to test the 36.59. So I need bulls to show me that. Okay, so we do have a high one. Okay, if you count from these lows, okay, this bar 47 went above 46. It hasn't closed yet, but as soon as that bar closes on its high, we could end up getting some bulls. So that's why I said wait, because we need to see this bull pressure. That means that 46 upper wick needs to be filled with a good, strong bull body with bar 47. If they cannot do that, then we're going to see bears trying one more time, coming down and at least testing the 36.59, possibly 36.58. I don't want to be stuck in that. I am hungry. I am hungry. I didn't have any breakfast because I was so excited about Tom coming in. So I'm nursing here a very old coffee. Yeah. I want to kind of buy. I don't want to miss that either. I'll just stop complaining. Well, let's see. Tastes good. It's on a warmer, but it's just not that good. All right, so because this is a breakout for bears, some bears look at this as a breakout pullback and they want to continue to sell. So if they do close this bar 47 on its low and break below the prior bull bar's low 46, then 36.59 to 36.58 becomes target, scalp target at least, and then I would still expect bulls to show up. All right, I think some bulls are finally getting excited here because we could end up getting this third push, 1, 2, and 3 maybe finally, and a 1, 2, 3 wedge, 1, 2, 3 wedge, and a double bottom. That would be nice to reverse this, but if it's not yet set up, you just cannot touch it. And I like the 5-minute charts. I can trade 1 minute too. It's just, it becomes a little too hectic for me. Busy. There it is. They're coming down. You see how they're trying to close that bear bar below the 46 low? That's continuation right there. But can they close it? If they do, we'll test the 59. That should be no problem. That should be no problem. This right here, 60.25, 59. Okay, they did close. I don't know if you guys noticed, but that 47 actually did close. Literally low. So ATR is 6, 63, that's 60, 77. I'm sorry, 57. We could test actually 57 since ATR is 6, but be careful right here, 58. We might even test 57, but I would take profit at 50. Let me see, 58 right here, because it could bounce to the upside right here. Now, if they do continue, they might come down and test the 36.55, but it's going to bounce here, so be careful if you're still selling. Remember, 5 to 10 points below 66, buyers are probably there. That's 3, that's 5, possibly down to 10 points. So I'm going to leave it at 5, see if we can come down. So 6 was 57. Did we test 57? Was I right with my math? All right, we tested 57.50. Well, I was wrong 2 ticks. Sorry. But it is bouncing, like I said. So you really need to take profit there. Now, can it continue to come down? I mean, I don't know. I think bulls are finally looking for a trap here. They're trying to trap the bears who are trying to sell here. So I'm not interested in selling anymore because I think we're going to end up going up to 69.75 and then furthermore up to 71.50 if they can close a good signal bar. We need a pin bar would be a good signal bar, but you want the body to be big enough, maybe half the size of or equal or the half the size of the wick. Okay, you do not want to see a big pin bar with the wick part is 3 times bigger than the body. Or there's a body and there's an upper wick bigger than the body or the same size of the body. Those are not good buy signals. So you want to see no wick at top, good healthy bull body. Okay. You have 4 bars overlapping. 45, 46, 47, and 48 at the moment. So it's slightly a limit order market. Even if we do get a pin bar with a good body, chances are, because it's a limit order market, the last 4 bars, before we buying the close of any pin bar, we might end up coming down a little bit before going back up. So be prepared for that as well. Yes, this is recorded, I think. Yeah. So when the team posts it, Tom's and my schedule, my sessions are going to be in there for you to download. All right, 46 seconds left. Looking to see how they're going to close this bar. If this bar ends up closing with a tiny little bit of bull body, I'm not interested in buying this whatsoever because it can still continue to come down. Remember, 5 points down here, they can even come down 10 points if they wanted to. So what you're getting here is a trading range low buyers and the low of yesterday buyers. They're trying to trap the bears. I would want to see a bull bar actually closing above 66.50. If I see a bull bar closing above 66.50, we're going to be so very quickly going up to the 71.50. Okay, so they couldn't close it where I want them to close. They have a pin bar, but they're trying to go up there anyway. But I don't know. Let's see if they can close this bar. If they can close this bar, then 69.50 is target, 71.50 is target, 71.75 is target met. for bulls. And as soon as they meet that target, that wick comes down. But I think we're going to now try to get up to the 36.75. See, that is right there is your buy signal. So all you could have done, you could have bought that, or you could have bought one tick above. Bulls are trying to reach here or go back up here or to the 50% of this big climactic move down, climactic bar's midpoint. If we do close a bar above 71.75, your next target is 36.75 and maybe a one tick above. But you want to see this bar close on its high. Now, if you bought this, your stop is underneath bar 48, right? So you have to scalp a little bit. If you're entering with a stop order in this limit order market, remember 1, 2, 3, 4, 5 bars overlapping, you still have to pay yourself. Because look at this, look what you're going against, okay? And from underneath bar 43 low, okay, to here, 45 high, you have a bear gap there. So we just tested the edge of that gap, okay? If you did not pay yourself, I told you where you needed to take profit. That means you're jeopardizing your long position because price can come all the way down here. And you're stuck because bulls might be looking for a double bottom with 48, double bottom higher low to go higher. So you always pay yourself. If you're entering in a limit order market, but you see a reason why you should be buying, just pay yourself. Whatever, try to get half of that ATR at least. Because if price is coming down and you're not so sure, you can always hit close and get out and you keep what you made. And if price goes down, you lose nothing. And if price closes higher, that means you can enter again. There's nothing wrong with that. All right, I think I'm done. I'm really hungry, guys, so I'm so sorry. I know it's not very professional for me to say that, but I'm going to pass out if I don't just stop the session. So I'll see you guys tomorrow. So let me check something here. Okay, so tomorrow is 9 to 12 myself, and then Brad will come in the afternoon. And then I'm on Wednesday, Thursday, and Friday, and then Brad will be on again Friday. All right, bye everyone. Stay safe. I'm hoping for bulls to continue to go up at least to the EMA, but they need to close this bar on its mid or preferably higher. If they cannot do that, I'm not interested just yet. We might look for maybe a double bottom, higher low. What if we break? What if we close a bear bar below the low of yesterday? Then expect 5 points to 10 points. We could come down. So watch out. But right now, it's okay to go long. You are already long. Your stop is down here. You're just hoping that this is going to keep going up. All right. So bulls are going to get a lot more interested if we close a bull bar above 71.75. Then 75 to 70, 46, 70, 75 and 2/4. Just 2 ticks above is also target. But first they need to close this bar at or above 36.71. There could be a breakout there. Just a little bit here. Why? So think about it. There was a support here. We broke that support, but we failed to sell. Now you see these wicks and that wick? Even if we close somewhere up here, bulls can actually fill and go up. Oh, I'll get out then. Okay, fine. All right, okay. So they closed the bar not so high or on its mid, but bulls might still try to fill that wick. Now, if they do fill that wick with a bull bar and close, listen, their buy stops are probably here, hoping that they get a breakout. But I don't know. I don't like this bar at all. It didn't close where I wanted to close. It didn't close on its mid. So I need to see now third bull bar with a bull body. This time, bulls need to show me a much better bull body, okay, with bar 50 for me to think that the swing has started. And in fact, even if this is a swing now, they can go up here, come back down. Now that's the one I'm looking for. I'm looking for that little slingshot back and then go. All right. Bye, everybody.